Welcome back. Welcome back. Welcome back. Come on in. Come on in. What's going on, Zan? What's good, Nikon? Yeah, the dot plot is the problem, and dot plot is sketch. Yeah, there's only one governor projecting projecting 2%, while three are projecting 3.75 to 4%. There's a little bit of a mutiny going on. All right, so looking at the dot plot, among the 19 officials, 7 believe that there should be no rate cut in 2026. 7 out of 19. 4 believe there should be a cumulative rate cut of 0.25. 4 believe there should be 0.50 or 0.5. 2 believe there should be a rate cut of 0.75. 1 believes there should be a rate cut of 100 basis points. And 1 believes there should be a cumulative cut of 150 basis points. They're all over the place. But 7 out of 19 are projecting no cuts in 2026. You got to remember too that exactly 7 came out and said there would be no cut during this rate cut. Remember? We had 7 governors come out and say chances are we're getting no rate cut. Apparently that same 7 are still banging the bear drum. I think what we're seeing is the old guy on his way out, the new guy on his way in, and a bit of jockeying for position. Yeah. They're picking sides. Yeah, I mean, but that's what we're asking them to do, right? Like, we're literally asking the Fed to project without all the data. That's why Powell gets so frustrated. All right, let me heat this coffee up and get ready for this. I'll be right back, y'all. We've got about 12 minutes. All right, I'm back. Pretty interesting little tidbits in this. Apparently, the Fed has agreed to open TOMMO or temporarily temporary open market operations. All that means is they're gonna tell you this is QE. It's not. But the bulls are going to scream QE right now. QE is when the Fed buys long-term bonds, right? 5-year, 10-year, 20-year, holds them. TOMMO is basically meant to keep the banks from going through any issues, right? It takes care of their overnight debts. So they are buying bonds, but they're short-term bonds, and they're being bought and sold, not bought and hold, not bought and held, right? So I don't even want to call it QE light, but it's the first step. Let me see where I can get a speech at. I think we've got a while to wait for that, Lee. At least another FOMC meeting, in my opinion, if not two. I don't think QE comes to save us during this run, yo. I think true QE, the way that we know it, is here to pick us up off the bottom of the bear market next year. Here we go. Oh, you can't play that. Try to get me with the music. All right, everybody find a comfortable position, not too comfortable, or else you're probably going to fall right to sleep.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a 1/4 percentage point. With today's decision, we have lowered our policy rate 3/4 of a percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled.
Build a website you love with Wix.
Really? Commercial?
Standing repurchase agreement or repo operations are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning and should be used when economically sensible. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Howard.
Thank you. Howard Schneider with Reuters. Just first turning to the statement, just to be clear, we're on the same page here. The insertion of the phrase, considering the extent and timing of additional adjustments, does that indicate that the Fed is now on hold until there's some clearer signal from inflation or jobs or the evolution of the economy along the baseline outlook?
So, yes, the adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems like with the additional GDP growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year. What's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup in growth in many of those now too. So it is it's partly that consumer spending has held up, it's been resilient, and it to another degree it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. You actually, some of that is due to the shutdown. So you can take 0.2 out of 2026 and put it in 2025. So it would really be 1.9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive. And as I mentioned, AI spending will continue. The consumer continues to spend. So it looks like the baseline would be solid growth next year.
Steve.
Thank you, Mr. Chairman, for taking our questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here, and have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have, if you go back, we held our policy rate at 5.4% for more than a year because inflation was high, very high, and unemployment in the labor market was really solid at that point. So what happened is over last summer of 24, inflation came down, and the labor market began to show real signs of weakness. And so we decided, as our framework tells us to do, that when the risks to the two goals become more equal, you should move from a stance that favors really dealing with one of them, in that case inflation, to a more balanced, more neutral setting. And so we did that. We did some cutting, and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September, and we've cut now 3. We've now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
If I could just follow up on the SEP, you have a whole lot of big increase in the growth numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic of you get more growth, but you don't get a whole lot of decline in unemployment? Thank you, sir.
So the implication is obviously higher productivity. And some of that may be AI. It just also, I think, productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity is also what enables incomes to rise over long periods of time. So it's basically a good thing. But that's certainly the implication.
Thank you. Colby Smith with the New York Times. Today's decision was clearly very divided. It wasn't just the two official dissents against a cut, but there were also soft dissents from 4 others. And I'm just wondering if this reluctance from several people to support recent reductions suggests that there is a much higher bar for cuts in the near term. And what exactly does the committee need to see if things are well positioned right now to support a January reduction?
Sure. So let me just say, as I mentioned, and as I've mentioned here before, the situation is that our 2 goals are a bit in tension, right? So interestingly, everyone around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. Where the difference is how do you weight those risks, and what does your forecast look like, and where do you, ultimately where do you think the bigger risk is, and you know, it's very unusual to have persistent tension between the 2 parts of the mandate, and when you do, this is what you see, and I think it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views, and you know, we come together and we reach you know, a place where we can make a decision. We made a decision today. We had, you know, 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, you know, we all have an outlook in terms of what's going to come, but I think ultimately having cut 75 and, you know, the effects of the 75 basis points will only begin to be coming in. As I've said before a couple times, we're well positioned to wait to see how the economy evolves. We'll just have to see. And we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that we're going to need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way data are collected in some of these measures, both in you know, inflation and in labor, in the labor market, so that the data may be distorted and not just sort of more volatile, but distorted, and that's really because data was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data by the time of the January meeting. So we expect to see a lot more, but I'm just saying that what we get for example, CPI or for the household survey, we're gonna look at that really carefully and understand that it may be distorted by very technical factors.
And just one more question on dissents. I mean, you talk about it in a very positive way, just given the complicated nature of the situation we're in economically. But is there any point in which those dissents become counterproductive, either to, you know, the Fed's communication and the messaging around the policy path forward?
I don't feel that we're at that point at all. I don't. I would say, again, these are good, thoughtful, respectful discussions, and you hear people say, and you hear many outside analysts say the same thing. I could make a case for either side. I mean, I could make that case. It's a close call. We have to make decisions, and we always hope that the data will give us a clear read. But in this situation, you have competing. If you look through the SEP, you'll see that a very large number of participants agree that risks are to the upside for unemployment and to the upside for inflation. So what do? You've got one tool. You can't do 2 things at once. So at what pace do you move? What size moves do you make, and that kind of thing? And what's the timing of them? It's a very challenging situation. I think we're in a good place to, as I mentioned, to wait and see how the economy evolves.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's been some discussion recently of the 1990s. In the 1990s, The committee did 2 discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down, or should we think of policy risks as genuinely two-sided from here?
So I don't think that a rate hike is anybody's base case at this point, and I'm not hearing that. What you see is some people feel we should stop here and that we're at the right place and just wait. Some people feel like we should cut once or more this year and next year. But when people are writing down their estimates of policy of where it should go, it is either holding here or cutting a little or cutting more than a little. So I don't see the base case as involving that. So of course, you know, a data set of 2, now 3, is not a big data set. But you are right about those 2 3-cut times in the 90s.
If I could follow up, the unemployment rate has been rising very gradually for the better part of 2 years, and indeed the statement today no longer describes the unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the, notwithstanding the 150 basis points in cuts prior to today?
So I think the idea is that with now having cut 75 basis points more now and having policy, you know, I'd call it in a broad range of plausible estimates of neutral, that will be a place which will enable the labor market to stabilize or to only tick up 1 or 2 more tenths, but we won't see, you know, any kind of a sharper downturn, which we haven't seen any evidence of at all. At the same time, policy is still in a place where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation, and as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but you know, we're going to start to see the data, and it'll tell us whether we were right or not.
Claire.
Claire Jones, Financial Times. A lot of people interpreted your comments at the October meeting that, you know, when there's a foggy situation, we slow down, to mean that, you know, there wouldn't be a cut now, there'd be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today rather than to move in January instead? Thank you.
Right. So in October, I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? You know, I would say point to a couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by about 60,000, so that would be negative 20,000 per month. And also, just to point out one other thing, surveys of households and businesses both showed declining supply and demand for workers. So I think you can say that the labor market has continued to cool gradually, maybe just a touch more gradually than we thought. You know, in terms of inflation, it's come in a touch lower, and I think the evidence is kind of growing that what's happening here is services inflation coming down, and that's offset by increases in goods, and that goods inflation is entirely in sectors where there are tariffs. So that does build on the story, and so far it's only a story, that that the goods inflation, which is really the source of the excess at this point, almost more than half the source of the excess inflation is goods, is tariffs. And you've got to say then, so what do we expect from tariffs? And I would say that is to some extent down to looking for broader economic heat. Do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate, Phillips curve kind of inflation. So we look at all those things, and we say that this was a decision to make. It obviously wasn't unanimous, but overall, that was the judgment that we made, and that's the action we took.
Just on the ample reserves point, how concerned were people around the table about some of the tensions we've seen in money markets? Thank you.
I wouldn't say concerned. So what really happened is this. Balance sheet shrinkage, sometimes called QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down pretty much close to zero. And then beginning in September, the federal funds rate started to tick up within the range, right? And it ticked up almost all the way to interest-on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in reserves, in an ample reserves regime. So, we knew this was going to come. When it finally did come, it came a little quicker than expected, but we were absolutely there to take the actions that we said we would take. So, and those actions are today. So, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is, if you look ahead, you'll see that April 15th is coming up, and our framework is such that we want to have ample reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop sharply and temporarily. So this seasonal buildup that we'll see in the next few months was going to happen anyway. It was going to happen because April 15th is April 15th. There's also a secular ongoing growth of the balance sheet. We have to keep reserves, call it constant, as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $20–25 billion per month. So that's a small part. That's going on. It's also happening in the context of a temporary few-month front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
Andrew.
Thanks, Mr. Chairman. This is the last post-FOMC press conference before an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule? And I'm just curious why the Fed's been so reticent on such a pivotal matter.
It's not something I want to address here, Andrew. We're not legal commentators. It's before the courts, and we don't think that we help matters by trying to engage as a public discussant of that. I'll give you a mulligan, though.
No, thanks. I don't know if that means I get 3 questions, but
no, just one more.
I guess I wanted to come back to the 1990s question, and do you see that as a useful model for thinking about what is happening in the economy right now?
I don't think it rises to that level. So I did think that in 2019, where we cut 3 times, but this is such a unique situation. It's not the 1970s, let's put it that way, but we do have tension between our 2 goals. And so that's just unique in my time at the Fed, and I think going back a long ways, we haven't had that. In our framework, as you know, says that when that's the case, that we try to, take a balanced approach to the 2 things, and we look at how far they are and how long it would take to get them back to each of them back to the goal. And that's a very subjective analysis, really. But it just tells you you've got to. And I think ultimately what it says is when they're broadly equally threatened or equally at risk, you should be kind of neutral. Because if you're either accommodative or tight, you're favoring one or the other goal. And so we've been sort of moving in the direction of neutral. Now we're in the range of neutral. We're in the high end of the range of neutral, I would say. And that's what we're doing now. It so happened that we've cut 3 times. That we haven't made any decision about January, but as I've said, we think we're well positioned to wait and see how the economy performs.
Edward.
Thanks, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, the inflation expectations has come down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat to the economy?
So with tariff inflation, it takes, there's the announcement of a tariff, and then there's, they start to take effect, and then it takes some months. Goods may have to be shipped from other parts of the, it may take, quite a while for an individual tariff to take its full effect. But once it's had that effect, then the question is, isn't that just a one-time price increase? So we actually look at it, all of the announcements and what you get from all that. You see sort of for each one of them, there's a time period, and then it's fully in. So if there are no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements, inflation from goods should peak in the first quarter or so, right, or roughly. We haven't been able to predict this with any precision. No one is. But call it the first quarter or so of next year should be the peak. And from here, it shouldn't be big. It should be a couple tenths or even less than that. We don't really have precision on this. And after that, again, if there are no new tariffs that are being announced that will take 9 months to get fully in, and 9 months is also an estimate, then you should start to see that coming down in the back half of next year.
And I want to see if I could address sort of the elephant in the room. The president's been talking openly about a new Fed chairman. Does that hinder your current job right now or change your thinking at all?
No.
Like,
No mulligans for it. Michael McKee from Bloomberg Radio and Television. 10-year rates are 50 basis points higher than when you started cutting back in September of 2024, and the yield curve basically has been steepening. Why do you think that continuing to cut now, especially in the absence of data, is going to bring down the yield on the thing that will move the economy the most?
So we're looking at the real economy and focusing on that. And you've got to, when the long bonds move around, you've got to look at why they're moving around. If you look at inflation compensation, it's very, that's one part of it is inflation compensation break-evens. And, they're at very comfortable levels. They're at levels consistent. Once you get out past the very short term now, break-evens are at at quite levels that are quite consistent with 2% inflation over time. So there's nothing happening with rates going up.
And we're booked. Using less points with my...
Oh, no, you got to be quicker than that.
Understands our commitment to 2% and expects us to get back there. So why are rates going up? It has to be something else. It must be, an expectation of higher growth or something like that. And that's a lot of what's been going on. I mean, you saw a big move, toward the end of last year, which was not to do with us. It was to do with other developments.
Well, you just mentioned that the public is expecting you to get back to 2%, and Americans overwhelmingly are citing high prices, inflation, as their #1 concern. Can you explain to them why you're prioritizing the labor market, which seems relatively stable to most people, instead of their #1 concern, inflation?
So we, as you know, we have a network of contacts in the U.S. economy, which is really unmatched if you go through the 12 reserve banks. So we hear loud and clear how people are experiencing really costs. It's really high costs. And a lot of that is not the current rate of inflation. A lot of that is just embedded higher cost due to higher inflation in 2022 and 23. So that's what's going on. And so the best thing we can do is restore inflation to its 2% goal, and our policy is intended to do that, but also have a strong economy where real wages are going up, where people are getting jobs and earning money, and we're going to need to have some years where real compensation is higher, it's positive, significantly positive, so nominal wages are higher than inflation, for people to start feeling good about the affordability issue. And so we're working hard on that. We're trying to keep inflation under control, but also support the labor market and strong wages, so that people are earning enough money and feeling economically healthy again.
Victoria.
Hi, Victoria Guida with Politico. Just to follow up on that, I mean, this is now the third time that you've cut this year and inflation is around 3%. So is the message that you're sort of trying to send with that you're okay with where inflation is for now, as long as people understand that at some point you still want to get back to 2% because inflation is relatively stable where it is?
Everyone should understand, and the surveys show that they do, that we're committed to 2% inflation, and we will deliver 2% inflation. But it's a complicated, unusual, difficult situation where the labor market is also under pressure, where job creation may actually be negative. Now, supply of workers has also gone way down, so the unemployment rate hasn't moved that much. But, you know, it's a labor market that seems to have significant downside risks. People care a lot about that. That's their jobs. That's their ability, if they get laid off or if they're entering the labor force, to find work. So that's really important to people. The story with inflation, and you know, we're well aware that this is a story at this point, is that if you get away from tariffs, inflation is in the low 2s, right? So it's really tariffs that's causing most of the inflation overshoot. And we do think of those as likely to, in the current situation, as likely to be a one-time price increase. Our job is to make sure that it is, and we will do that job. But right now, you've got this difficult balance, and there are risks to both sides. There's no risk-free path. If it was just inflation and the labor market was just really strong, and then rates would be higher, as they were for more than a year. You know, we didn't have to worry about inflation. Sorry, about the labor market, because the labor market unemployment was very low. If you remember when inflation was very high, there was a labor shortage, so we could focus entirely on inflation. Now it's different. We actually have risks to both, and I think we're doing the best we can for people. They also care about their jobs. They do care about affordability, and the best thing we can do there is both to support economic activity, but also, you know, make sure that when tariff inflation goes down and disappears, inflation lands around 2%.
Elizabeth. Thanks so much, Elizabeth Schulze with ABC News. Just to follow up, you keep talking about job growth being negative. Why do you think job growth is so much worse than some of the official data? Why do you think job growth is, to follow up on your comments about job growth, why is it so much worse than the official data is suggesting?
Oh, well, we know, I think I don't think this is particularly controversial. It's very difficult to estimate job growth in real time. They don't count everybody. They have a survey. And there's been something of a systematic overcount. And so we expected, and they correct it twice a year. So the last time they corrected it, we thought the correction would be 800,000 or 900,000. I won't get the numbers exactly right. And that was exactly what happened. So we think that has persisted. And so there's an overcount in the payroll job numbers, we think, continuing, and it will be corrected. I don't have the exact month in my head right now, and that's just, I think forecasters generally understand that. So, and we think it's about 60,000 a month, so 40,000 jobs could be negative 20, and you know, that could be wrong by 10 or 20 in either direction. But in any case, but the thing is, that's job creation in a way. That's demand. Labor supply has also come down quite sharply. So, you know, if you had a world where there's just no growth in workers and you really don't need a lot of jobs to have full employment, some people argue that's what we're looking at. But I think a world where job creation is negative, I just think we need to watch that situation very carefully and be in a position where we're not, you know, pushing down on job creation with our policy.
When we're talking about supply, we have seen major American employers like Amazon cite AI in job cuts. How much right now are you factoring in AI into the current weakness in the job market?
So it's probably part of the story. It's not a big part of the story yet. We don't know whether it will be. But, you know, for example, if you look at, you can't miss the big announcements of layoffs and also companies saying that they're not going to hire anybody for a long time, and they cite AI. That's all clearly happening. At the same time, people are not filing for unemployment insurance, and since job creation, job finding rates are extremely low. If there were big numbers of layoffs, you'd expect the continuing claims to go up, and you expect new claims to go up. But really haven't much. So it's a little bit curious. But longer term, though, the question is, what are we going to see here? And we don't know. But it's it may be that in past really significant technology innovation eras, you have seen some jobs destroyed and other jobs made. Ultimately, what's happened for a couple hundred years is when you get through all that, you have higher productivity and you have new jobs, and there are enough jobs for people. This may be different. It's every time we have a wave of technology, we think, oh, this could put a lot of people out of work. What are they going to do? In the past, there's always been more work and higher productivity, and incomes have risen. What will happen here, we're going to have to see. But right now is such early days. We don't think we see much. It's certainly not showing up in layoffs yet.
Enda.
Thank you, Chair. Enda Curran, Bloomberg News. Given the breadth of views on the policy committee, why is there such a division of views between
the policy what?
On the committee.
Thank you.
Why is there such a division of views between the presidents and the board members?
It's not so stark as that. The views are more varied in each group as well. There's some of that, but I would say they're also governors and they're people on both sides in both groups. I wouldn't put too much in that.
Okay, and just to follow up, please, given your growth upgrade, how would you factor in, or what would be the economic impact if the Supreme Court is to strike down the tariffs that they're currently hearing, please, in terms of growth and inflation? Thank you.
I really don't know. It would depend. It would depend on a whole bunch of things we don't know. So I can't really help you there.
Christine. Thank you.
Thank you, Chair Powell. Christine Romans, NBC News. I wanted to ask you about how the higher income households are really driving spending right now. They're backed by home equity and stock market wealth, but lower income consumers are really struggling with the accumulation of 5 years now of rising prices. It's price levels, not really the inflation rate, holding some of these families back. How sustainable is this so-called K-shaped economy, and what are the Fed's thoughts on whether that's a risk going forward?
So we do, through our vast network of contacts and just through our observation of what's going on in the economy, we hear about this a lot. If you listen to the earnings reports for consumer-facing companies that tend to deal with low and moderate income people, they'll all say that we're seeing people, tightening their belts, changing products that they buy, buying less, and that sort of thing. And so it's clearly a thing. It's also clearly a thing that, asset values, housing values, and securities values are high, and they tend to be owned by people more at the higher end of the income and wealth. So as how sustainable it is, I don't know. Most of the consumption does happen by people who have more means. I think the top third accounts for way more than a third of the consumption, for example. So it's a good question how sustainable that is. The best we can do is to have a price stability and a strong labor market. And what we saw, for example, what we saw at the end of the very, very long expansion that ended with the outbreak of the pandemic, we saw that it was 10 years and 8 months or something like that, the longest one in recorded history. In the last 2 years, most of the largest part of the wage gains were going to people in the bottom quartile, the bottom part of the low and moderate income. So, having a strong labor market for a long period of time is really, really good from a social standpoint. It's helping people at the lower income levels, and that's what we all want to get back to. But we got to have price stability, and we got to have full employment, maximum employment.
And just quickly, you mentioned the housing market remains kind of weak. With these rate cuts that we've seen, is there a chance we're going to see more affordability in the housing market so more people can maybe enjoy that part of wealth creation? I mean, the average age or median age of a first-time home buyer is now 40 years old. That's the highest on record.
Yeah, so the housing market faces some really significant challenges. And I don't know that, a 25 basis point decline in the federal funds rate is going to make much of a difference for people. Housing supply is low. Many people have very, very low low-rate mortgages from the pandemic period, and they kept refinancing and got the really low. So it's made it expensive for them to move. And, you know, we're a ways away from that changing. Also, we haven't built enough housing in the country for a long time, and so a lot of estimates suggest that we just need more housing of different kinds. So housing is going to be a problem, and you know, really the tools to address it are we can raise and lower interest rates, but we don't really have the tools to address, you know, a secular housing shortage, a structural housing shortage.
Chris.
Thanks. Chris Rugaber, Associated Press. You mentioned on inflation, services inflation being low, goods inflation looking like maybe it'll peak. We had the wages report you mentioned today showing moderating wage growth. Where are the inflation risks? It looks like inflation is cooling, in your view. At the same time, you have potentially negative hiring. Why not? Why aren't we hearing more about maybe more cuts in this environment?
Well, I think the risk in inflation is pretty clear to see, and that is, you know, we see higher inflation. As I mentioned, most of the inflation over target is from goods, and we estimate, we expect, most of us, that inflation will be a one-time price increase and then come down. We just came off an experience where inflation turned out to be much more persistent than anyone had expected. Is that going to happen now? You know, that's the risk. The risk is either that tariff inflation just turns out to be more and more persistent, maybe because companies who are now holding back from passing through the tariffs will just keep doing that. So you'll see you see that. I think the other possibility is less likely, and that is just that you know, the labor market gets tight or the economy gets tight, and you see, you know, just traditional inflation. I don't see that as particularly likely. But so I think, you know, again, you know, all across the committee, people see the picture pretty similarly, but see the risks quite differently. And some people do see the inflation risk, and I wouldn't dismiss that case. I don't dismiss that case, but you've got to make an assessment, and this is the assessment we made.
Hi, Chair Powell. Neil Irwin with Axios. So this has come up a couple of times today, but to be clear, do you believe that we're experiencing a positive productivity shock, whether from AI or policy factors or whatever? And how much is that driving the higher GDP projection in the SEP?
So yeah, I mean, I never thought I would see a time when we had, you know, 5-6 years of 2% productivity growth. This is higher. You know, this is definitely higher, and it was before it could be attributed to AI. I also think if you look at what AI can do, and if you use it in your personal life, as I imagine many of us have, you can see the prospects for productivity. I think it makes people who use it more productive. It may make other people have to find other jobs, though. So it could have productivity implications while also having, you know, social and labor market implications that we don't have the tools to deal with. But yes, I think we're definitely seeing higher productivity. I think it's a little quick to be saying it's generative AI, but I don't know. You know, the pandemic may have induced people to do more automation and do more things with computers to replace people, and that raises productivity, you know, output per hour.
Does that imply a higher neutral rate, and therefore the policy might be a little easier than it seems?
All things equal, yes, but all things aren't equal. There are many things pushing in different directions on where the neutral rate would be. But yes, that argument does come up.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. After today, you only have 3 more meetings at the helm of the Fed. Since becoming Fed chair, you've seen multiple trade wars, the pandemic, COVID reopening, period of high inflation. I know your term's not up as chair until May, but I'm wondering if you've given any thought to what you want your legacy to be.
My legacy. My thought is that I really want to turn this job over to whoever replaces me with the economy in really good shape. That's what I want to do. I want inflation to be under control, coming back down to 2%, and I want the labor market to be strong. That's what I want. And all of my efforts are to get to that place. They have been all along, but ultimately, that's what I'm. And it's, I don't have time to think about bigger things. I hope many years ahead to worry about that, but there's enough to do.
Relatedly, have you given any more thought, and can you tell us any more about your plans on whether or not you plan to stay on the Fed Board of Governors even after your term as chair expires?
Again, I'm focused on my remaining time as chair. I haven't got anything new on that to tell you.
Go to Mark for the last question.
Chairman Mark Hamrick with Bankrate. Even while many price levels remain elevated, the reductions in the federal funds rate means that savings rates, or yields to be more precise, have peaked while key borrowing rates remain elevated. And that's, as we've discussed here, as many Americans struggle with liquidity or emergency savings challenges. Is that just collateral damage or an unintended consequence because your tools are limited in addressing individual or household liquidity constraints, insufficient money in the bank?
I don't know. I wouldn't agree that that's collateral damage of our. I mean, over time, we do what we do in order to create price stability and maximum employment, and those things are hugely valuable to all the people we serve. When we raise rates to bring inflation down, that does work by slowing the economy, but we've moved back our policy back down to where it's certainly not strongly restrictive at this point. I think it's sort of in the range of neutral. So that's what we're trying to do, and I would want people to understand that. I think what people are feeling is the effect of higher prices. There was a global wave. Sort of every large economy in the world, every large open economy, market-based economy in the world had a wave of inflation that looked an awful lot like ours. We actually came through better than any other country, substantially better. We had higher growth, we had better labor market, and this is really due to the American economy. We have an extraordinary economy, and people are innovative, they work hard, and so all of us who work in economics jobs are really fortunate to have the U.S. economy. So, thank you very much.
You just had to poop on us on the way out, huh? I don't know who the last guy that asked that question is, but screw that guy.
I worry about less what he says and more about what they ask.
Straight up. It's always the press conference, bro. Powell's always very measured with the shit he says, but the press conference, they always try to get it out of him.
They load their questions up too, like the way they, yeah.
Mm-hmm. You can tell who's short and who's long in the crowd by the questions.
The way they frame
questions
it,
they ask. Yep, straight up. If you could just get Powell to say the right word, you can quit this stupid reporter job. Go buy a
It reminds me
yacht.
of like a Jedi, like he's like has a lightsaber blocking all the bolts coming at him.
Yeah, the Trump question was great when they asked him about the new Fed guy. Asked him a 10-minute question about the new Fed guy, and he said no. Next question. His one-word answers are always the best. You tell when he's had enough of a reporter. He keeps it nice and short. Some of the questions are pre-made. Nick Timmerose, Nick the Snitch, or the Fed Whisperer that we call him, those questions come straight from the Fed. Nick only asks questions that Powell wants to answer. But because of that, we do use him to get a sort of heads up on what's going to happen. Anytime that we've had a Fed decision that was outside of expectations, Nick has tweeted it the night before. I have a feeling the Fed might decide to da-da-da, and then sure enough, the next day, bam. But it's all good. That's just our art of war shit, right? what do they call it? Manufactured opposition. The reason why there's a Burger King in front of every McDonald's. Right. So our uptrend. Let's go look at the macro real fast. Still inside of our macro bear flag, right? Would still need to get above 965. Would be our bullish trigger. And this is the flag here on our main chart, right? So we're talking about getting above this level. Controlled opposition, there you go. Having a brain fart for a second. That wasn't that bad though. They kept it short. I was hoping we wouldn't get the 2.5 hour, 3 hour press conference.
That was that's essentially the most important one for the year, right?
I'll be honest with you, every FOMC in the last 4 months has been the most important FOMC of our life.
Well, yeah. Well, each one after is more important than the
Yeah.
previous one.
Yeah.
But I always feel like the last one of the year kind of sets the tone a little bit for like what next year might be like.
Well, we get the dot plot and shit too, so that's important. The dot plot looks kind of sickly.
He seemed kind of dovish. So, you think they're caring less about inflation and more about
Employment.
employment numbers?
Not only that, but their third mandate, which they don't speak about, but they 1000% have a third mandate now, is to balance the bond market. So bonds are going to have a really big deal with that. They're already buying, right? They've already decided today. And I was reading the report when it came out, and they were talking about they're starting the TOMMO, which is basically short-term bond buys to support banks, but they're settled almost every day. So where QE, they buy bonds and hold, right? Money stays in the system. With TOMMO, they buy overnight to make sure if anybody has any sort of issues overnight, they're fine, and then in the morning they sell off again. So the money doesn't stay in. But it is like a pressure relief valve, right? And that tends to make people feel more comfortable because there's less chance of anything blowing up in a big way when they're running TOMMO.
Well, that's kind of what he was mentioning with the reverse repo market there. And
Yeah.
I haven't heard him actually mention that in a long time.
No, they
which I
mention it
think is a
because
good
they
thing.
mention it because they drain the shit out of it.
Yeah, but now they're bringing it back up again. Like
They have to because the TGA is too filled. So the TGA continued to fill to over $1 trillion while the government was shut down. The mechanism that filled the TGA never stopped when the government shut down. But they were shut down so they couldn't spend. But that has to go into reverse repo. That has to go into here.
They couldn't buy bonds at that time either, right?
Let's get off a log. Look at how low this shit is.
Yeah.
Like, we literally drained the reverse repo. And we did it to fill the TGA, which right now should be at Dun, dun, dun. Where are we?
So basically, what you're saying is they're going to bail out banks first, and make sure that that whole sector is okay, and then they'll spread out their efforts from there.
That's not it. So the way it works is, here it is. Yeah, the TGA got filled all the way to over $1 trillion. We're now down to 880. So when Trump first came in, let's go smaller time frame here. Go 2 year. Trump came in, we were at 882 billion on the TGA. That got spent as Powell refused to cut, right? So without the liquidity needed, they spent out of the general account. This is the main account for the government.
Yeah.
This, the reverse repo, is filled when there's profits, right? So when there's profits from the assets that are being held on the asset sheet, the reverse repo gets filled. When the TGA gets drained, the reverse repo is used to refill the TGA. When the reverse repo is filled, the TGA gets spent and profits get put into the reverse repo. So in other words, the liquidity that's gonna flow to get, oh look, I had basically explained it here. So you have three major account, or money sits in three places, right? US money sits in three places. It either sits in the TGA, the reverse repo, or it sits in bank deposits, right? Where it's sitting determines who has access to it. When money's sitting in bank deposits, we all have access to it, right? It's in our banks. We can have, when it's in the TGA, only the government can spend it. When it's in the reverse repo, it can only be spent to refill the TGA. Right? So the problem is that when the TGA drains, so like let's say they drain the TGA into the reverse repo right now to fill up the reverse repo, the Fed has to refill the TGA, and that creates a liquidity suck. And that's what we had. Right? If we turn on Bitcoin on.
Is this like a macroeconomic hedge?
In a way, it's like it's the same way that in a household you balance your accounts, right? Like you have balanced accounts. But notice ever since the TGA went flat, right? When no more money could come out of the TGA, which means we just had a pure liquidity suck. Risk assets take a shit. As long as the money's flowing, then it's available because it's going into the TGA, into bank accounts, and then we can use it. When it's not flowing and the TGA is filled to the max and not being spent, then bank deposits are the ones that take a hit. Right?
But
So that's why I've been talking about the liquidity is there. It's just not flowing through the pipes that it needs to flow through to get to people's hands where they can spend it on shit that we want them to spend it on. That makes any sense.
Yeah.
But this is a opportunity to buy, yes, when it's down there, yeah?
Yeah, I mean, it shows that the Fed is running out of options, right? Either that reverse repo has to be drained into the TGA, or the Fed needs to start printing, but the money needs to flow. You can't have your emergency bank account on empty, which is basically what this is. You have your main bank account, and then you got your oh shit bank account, right? Maybe the one that like maybe the wife doesn't know about, right? But you just drained it to keep the main bank account afloat, to keep her from being upset. But now you're sitting on no emergency funds. You use the kids' trust fund, you use the kids' college fund, you used all the emergency vacation money that you were saving up for that trip to Paris. So what do? Right? Your main focus right now is to fill that up as soon as possible before something happens. Because if something happens when the reverse repo is empty, then we're screwed. Trump always talks after Powell. Like his thing now.
What's he saying? Is he live? Respectfully, Mr. President, can you just shut up for 5 minutes?
Well, that's what I'm saying, Renora. Right? They're in a position where they're going to have to either deploy funds or they're going to have to drain TGA. What we don't want them to do is drain the TGA. Because if you drain the TGA to fill the reverse repo, then we go back into liquidity suck. Right? Because that money has to be brought back into the TGA eventually. So it's more about the motivations for them to have to turn on the money printer soon. Because they're playing too much. They're using account A to pay off account B, and in our households, we know how that ends up if you do that for too long, right? But there's plenty of Americans right now that are taking cash withdrawals from credit cards to pay for other credit cards. Not much different than that. It's just not sustainable. And we don't have the ability to just print money, or we would, right? Like in a heartbeat. We'll worry about later. I need to buy this milk now. Now we got to see how the market digests this, Andy. So initially, you're gonna have the overreactions from the clickbait guys that are on there trying to make it look like it's crazy. The bulls are gonna tell you that TOMMO announcement is QE. The bears are gonna tell you that there's no cuts for all of 2026, or only one cut for 2026. People with a little bit more sort of head on their shoulders are gonna take the next 4 or 5 hours to really dive in, research, make their videos. So we've got a good half a day to deal with sentiment. Right? After that, people should start having a better grasp on what was said today. Yeah, X automatically is gonna be saying it's QE. But not quite yet. We're in an uptrend, Hugs. One of y'all tell me what this looks like. Comes from the uptrend. But the bullish trigger for that, like I said, would be continuation above 94.2. And then our main bullish trigger would be getting out of that bear flag structure. Let me guess, it's not a cup and handle fruit because it's not a smooth cup. Would this make you feel any better? We more comfortable with a higher low fractal? Because you know it's exactly the same measured move, right? I don't worry about the smoothness of cups. If I get a really, really smooth cup and handle, yeah, that's great, right? Even more bullish. But the measured move is exactly the same. Let's see if we can get a hard reach here. As we've gone over 1,000,000 times why alts underperformed during this run. Okay, so unless unless your thesis is that every bull run from now on is going to be a quantitative tightening bull run, then you can't think that way about alts. You just have to check it off in your mind and say, okay, when the Fed is tightening, right? When monetary policy is restrictive, when the money printer is not on, we need to focus on Bitcoin. We need to focus on gold. Right? When the money printer is on, when we're in quantitative easing and bank deposits are full, then we can go back to worrying about what alts are gonna, 100x. There's a reason for it. Right? It's not like they just decided to underperform. Yeah, I mean, it's easy to forget it, right? We just got to keep reminding ourselves because it's just horrible, right? Compared to the last alt season, you look at this shit and you're like, what the hell? But when you start to sort of break it down and understand why, it's just us in here, right? Anybody that had any expendable cash already came in the market, lost it on memes, and if they're still risking, they're probably on Poly Market or Stake, or prize picks or something like that, right? That they feel more comfortable. It's just us here and institutions, which is why like the only alts I'm paying attention to are ones that institutions are able to buy or have interest in, because I don't have any faith in retail coming in at the end to save us, right? Without a blow off top, there's no retail. So if we're going to have a blow off top, that's going to come from institutions. That is the question, Doge. When? Not if, but when. Yeah, I mean, that's true, Mike. Right. Alts that manage to perform during this run should sit in a different spot in your mind right now when it comes compared to other alts. Because if they manage to pump during this environment, just imagine. Now, at the bottom of the bear market, I'm going to be preaching don't fall in love with old cycle coins, and I still feel that way. But there are a couple of old cycle coins, especially because of how they performed, that I think have moved themselves into a different sort of bracket for me. Like, I will not be fading BNB. I will not be fading Sol. I will not be fading Sui.
Sorry if it was a stupid question. What is fading?
Like, kind of ignoring them, right? Or just like taking profits as soon as, excuse me, as soon as they pump.
Okay.
Yeah, like when we talk about fading the rallies, that means like when you see the rally, just take a little off the top. Right? Like you fade the rallies, you don't fall in love with them. But I did that with Soul, and then you blink and poof, gone. I did that with BNB early on, and then you blink and then it's gone and it never retraces, right? So like some coins are to be faded and then some are to be accumulated. And that's what I mean. Like the ones that outperformed during this run, as bad as this was, I think move themselves into that position of accumulation during the next bear market,
Yep, thank you.
Oh, there's tons of money to be made during the bear market. The bear market doesn't stop the bag, especially if you short. I mean, that's the Super Bowl for bears. But even if you just long, right, there's plenty of dead cat rallies or bear market rallies. What's good about going long during the bear market is that, like I said, you know that you have to fade those rallies, right? Nobody falls in love with a position during the bear that's going up. You know eventually it's going to retrace, but you don't hesitate to take profits. Last thing you want to do is find yourself round tripping during the bear, because that can get ugly. But also remember, y'all, it's only a year. Only a year. I know we think of 4-year cycles and we're like, damn, that means I have to wait another 4 years. Like, no, you have to wait another 4 years to get to the top again. But it's only a year until it gets fun for investors again. But in my opinion, if we don't break all-time highs on this relief rally, we should be seeing at least 45. From 45 to 55 would be my bottoms.
If we go into or continue a bear market from here, which does seem to be the more likely scenario, like it's really not a bad thing because yeah, you do got to suffer the down waves and like give up on trying to make moves to the upside for a little while, but once you get down to the bottom, it's so good. Like it just gets so much easier.
Yeah.
As long as you do what Dbloc says and you don't get married to it, you just you buy when it pumps, you sell, and then you can do it all over again, like 10 times in a row over the course of that year.
We just
And it's
got
often
that.
been said that
Go ahead.
it's often been said that you can make money in a bull market, but a bear market is where you get rich. I prefer the bear market. I think anyone whose first cycle this is, like if this is your first cycle, you're probably likely going to have some difficulty going forward, like just like trying to navigate it. Like if you've never experienced a crypto bear market before, you'll probably have difficulty trying to navigate it, so it might not be great for you. If this is your second or third bear market, it's probably going to be the best year of your life.
You know I prefer the bear market quote.
Money's made at the bottom of the bear. You don't realize that money until the top, but the true money is made at the bottom of the bear. That's where you lock in the gains that you're going to make in 3 years.
I'm also, I mean, and that's considering like based off of what I just said. That's based off the assumption that this is like a like a regular bear market, like it's orthodox, like it only lasts a year.
Is Trump
I mean, it
still
could
speaking right now?
last more than a year. Yes.
Jeez. How much longer, bro?
Not sure. I think he's addressed almost everyone
How
at the
much
table.
longer, bro? How much longer, bro?
I don't even got to
I
listen to the
think
speech to know that he's talking crazy right now.
they're talking about tariffs and stuff.
Yeah, I figured.
But I think he's addressed almost everyone at the table. I don't know. Maybe a few more people.
Hey, Dbloc, on the topic of bear markets, it's kind of a big question, but what do you forecast in this upcoming bear market that we'll see with what's happened in the last maybe 6 months with government that'll be different in this bear market that you're going to kind of keep an eye out for?
I mean, we got to watch the new Fed guy for sure. But anything that he does, if he comes in May, that's halfway through our bear market. Any money that's released from the Fed is going to take at least 100 days from that offset from M2 to hit. So we're talking the effects we'd start to feel them at the bottom of the next bear market, right? That would be the catalyst that gets things pumping again. I just don't think that it happens soon enough or quick enough to stop the bear market, or maybe cut it short. Who knows? Maybe cut it a little short. But as of right now, I'm looking at mid-October 2026, 45 to 55K for Bitcoin.
So, in the event that we have like an extended cycle, because the thought crossed my mind earlier, this government shutdown, there's been like so many setbacks this cycle that it's almost like things have been delayed. Like
They
this
slow
pivot,
walked it.
shifted.
They slow walked
Yeah,
it. You
because
remember
like
my thesis when I said
you're
that
trying to,
they're going to
yeah,
try to
the
push those
18.5.
tops. Yeah, they're going to try to push the tops. Whether they're successful or not is the question, right? Because they could try and fail. So just because I feel like I know that that's what they're trying doesn't mean they're going to be successful at it.
Right. Well, say they are, right?
Mhm.
Just for just for example's sake, say that that is what happens. We have an extended cycle blow off top, whatever, and then the 18.5-year crash. Do you think that it's going to be an orthodox bear market for Bitcoin, or do you think it's going to be
Have
unorthodox?
zero idea. Guys, the only economic climate that we haven't seen Bitcoin perform in yet is a housing downturn. Remember that Bitcoin was born out of the ashes of the bottom of the last one, 2008, right? That's where Bitcoin came to be a thing. Bitcoin, we haven't seen Bitcoin's performance during a housing crash at all. So that would be pure speculation. I would like to assume that it reacts the same way. You know what I mean? Which means maybe, even, I mean, I don't know, because it takes 4 years. It takes 4 years for the cycle to really get going, right? 18.6-year cycle. So that means that our bull market, our next bull market, will come in as real estate is bottoming. So does that mean that we have a lackluster bull market? It's all going to depend on monetary policy, right? There's just so many like question marks that we don't know. But I can tell you one thing for sure. Nobody can tell you how Bitcoin is going to react during the housing crash because it's never happened before. We can assume, we can speculate, but it's going to be a first. Just like this was the first quantitative tightening bull market, right?
I think I'm sort of leaning towards the side that it's going to be worse than previous bear markets in terms of time. Not really necessarily like a correction in price, but correction in time will be worse. So I think that it's going to last longer. Like it might be only as bad as the previous ones, or maybe slightly better in terms of price drop, but I think it will last a lot longer before it starts to pick up again. That's the side I'm leaning towards, but I also think that there's a perfectly reasonable argument that it could be the opposite, and we could see Bitcoin as a flight to safety. I think it would be interesting to see if that actually happens.
I'm kind of thinking the opposite. I'm kind of thinking if it does affect, it's going to be a deeper, like right now 77% was our last retracement for the bear market, right? I'm assuming 70% just for diminished returns. If we get more than that, right, then I would have to attribute that to, like, if we break diminished returns to the downside, if we get more than 77, or even if we just get 77, either way, I would blame it on that. But I think it happens quicker, right? So you know that the bear market, we've got 8 months of down, or we got 7 months of down, and then we've got like 3 or 4 months where you just have to convince the world that crypto's not dead again. Nobody wants to buy it. It just sits there and goes sideways. I don't think we have that phase, right? I think institutions don't need any convincing. Nation states don't need convincing, right? They will start to buy back in once it gets down to their levels. I don't know. It's going to be interesting, though.
Yeah,
I
that's
think
what's
that
on my mind.
what you like, just based off what you said, I think that that's going to be dependent on like when the tide goes out, who's swimming naked.
Yeah.
Like, are we going to have as many people swimming naked as last time? Because we had Sam bankrupt fraud. We had
Oh, this is going
Celsius,
belly up. I
Luna,
don't know if we'll get any like large
Voyager.
exchanges, but I know for sure
Don't
some of
want.
these digital asset treasury companies are going to blow up. They're not prepared to hold during a bear. They just jumped on the wave because it was good for their stock price. But
They have no idea what they're doing.
these companies are going to unwind those treasuries once shit gets bad. Or they're going to
If they get
sell to larger
delisted,
companies, right? That's another wave that I see coming. Large Bitcoin asset treasury companies buying smaller ones and absorbing their Bitcoin.
yeah, I mean that, like, them having, like, if they go bankrupt and get delisted and essentially force liquidated, like if they're forced to liquidate their assets, like I'll buy them.
Yeah.
You know, like they'll probably be really cheap by then.
Yeah. Stock price plummets as your earnings come in shit during the bear. Then it opens you up to a hostile takeover where you're trading underneath net asset value, and someone can take control of the company through price, through shares, and control the Bitcoin without having to buy the actual Bitcoin. right? Hostile takeover, you get the company's assets, boom, you just accumulated all the Bitcoin that they held for less than that asset value.
Pennies on the dollar, almost,
Yeah.
in some cases.
I was worried when they started popping up, right? Like, yeah, it's good for us, legacies, recognizing the strength of Bitcoin as an asset to hold on your sheets. All of that's cool. But these companies are bullshit companies, right? These are companies that were dead like MicroStrategy was, that are looking at what MicroStrategy did and say, hey, we can save ourselves if we do this. The problem is that their shareholders are already desperate. And the new shareholders that they got only care that it's trading over net asset value. Right? They're gonna jump ship the second that it's not worth the Bitcoin that they're holding. And then they'll have an emergency shareholder meeting. The CEO will be forced to sell off or lose his job or, sell off to another company. Everybody wants an exit. Everybody's looking for an exit plan. And they don't all have Michael Saylor, right? That's what I've been saying from the beginning. These CEOs are not Michael Saylor, and their shareholders are not MicroStrategy shareholders that have been through bear markets before.
Yeah, like I keep looking at these charts for these companies, like like the Game Square and Naka. Like Naka's just like a medical facility, and they decided to adopt Bitcoin and become like partially a Bitcoin treasury. Like, how did
Desperation,
those
bro.
two
That's all
mix?
it is. It's
I'm
working,
just
so
sitting
they
there.
did it.
Well, I'm sitting there looking at their stock chart, their stock price charts, and I'm like, dude, these guys are freaking amateurs. Like, they just have no idea what they're doing.
Hey, to be fair,
Yeah,
that's what happens when you listen to Michael Saylor for more than like an hour and a half. Coming to the shareholder meeting the next day, like, I got a plan, guys. The orange
Guys, I have
pill.
an idea. It's completely original. It's genius. It's gonna work.
At this point, these Bitcoin ornaments are gonna get here after Christmas. Supply chain is Etsy. It's some dude in his garage with a 3D printer. He needs to hurry the hell up. Not gonna lie, a little 3D printer would be kind of cool to have at the crib. I can already see me just printing out shit for no reason.
I would totally do the same.
I should have checked on Temu for that shit, Los. That shit would have probably got here quicker.
Yeah, be able to use it for a week before it breaks.
So my neighbor gave me a 3D printer. He walked it over, but he left the SD card in there, and so I popped it in, and now I know what he was printing. And
Oh boy.
it's like now when I see him, I don't know if he knows that I know that he knows, or he don't care, or he's doing it intentionally. So I wait. And he's like 3 doors down, and we're homies. So like, I just haven't felt it out yet, but I'll let you guys know.
We appreciate that.
Trump's still on stage.
Yeah, he's not really on stage. He's just in the office talking to some people.
Oh,
It's like a round table conference.
gotcha.
people from different countries. Another thing that they're discussing is like the import and export of these chips, like semiconductors. I guess the idea is we're going to give chips to China, but not the best ones. We're going to give them better ones than what they have, but not the best ones that we have. Like,
So petty.
I don't think they're talking about China specifically in this meeting, but that's what I've been hearing in articles and stuff over the last few days.
All we're doing is making them way better at software. Because they have to do more with less. That's how DeepSeek became a thing.
Like they did with DeepSeek, yeah.
Yeah. You force them, right? You're going to force their hand and they're just going to get good at shit.
So you think he's like, all right, here, take this. Like, don't go digging into this stuff anymore. Just here, take this and be happy with it.
I think we realize that there's really no stopping it. Like at this point, it's leverage, right? We got something they want. They've got shit we need. Until we get everything we want from them, they're not going to get everything they want from us. So we'll do a little partial, right? This was with the tariff deal when China agreed to not tariff the processing of rare earth metals. China handles like 85% of all the rare earth metal processing.
Okay, silver changed its mind.
I don't know. Silver's like the good kid. Like the one kid you don't worry about, you never check their homework, like you know they're straight. Like Silver's, I don't even look at that chart. Silver's
Yeah, I
just
just buy it every
a
day.
good boy.
I buy it every day. I sell it every day, and I never lose any money. It's freaking great.
There's no real target for this. This is just sentiment. Like I said, we've got to let this day shake out. FOMC volatility. There's a lot of people who refuse to trade on FOMC days, period, because of this shit. I don't blame them. But if you are going to trade it, you need to take your profits when you see it. FOMC days don't tend to be like the big pivot that sends us on a massive run type day, right? There's volatility, it shakes out, and then once it settles, then the next week we'll get a better idea. Yeah, I agree, YG. It's like I said earlier, it's like sticking your foot in a blender.
It's looking like an ugly double top there. In the short term. Yeah, I don't trade on FOMC days. I just opt out of it. I was like, I used to do it before, and it was so easy to get wrecked that I was like, yeah, I'm just gonna sit this one out.
It's seductive, bro. Because it's like everybody's all excited. You know, you're like, oh, I don't want to miss the move. Oh, that's the SR flip. That purple box. I mean, we would want to hold this, right? This is our major level. Resistance turned into support, turned back into resistance. We're trying to hold it as support now. If we want to push away, obviously we need to. This would be a good spot to hold. But overall, we are still inside of this flag. Remember. Weekend trap so far has played out pretty textbook, right? Trap longs, trap shorts. We know that the first move out of the weekend trap to free one side indicates the false move. So we had our false move down, and we are on our second day of our 3-day up.
Are you saying there's a chance?
There's nothing crazy yet, in my opinion. There's nothing to freak out about here. Here, to make it easy, we'll draw our uptrend from our false move. That's when you can start to worry. And then even then, you would have to break structure, and you'd literally have to come all the way back down to invalidate. Remember, false move, 3 days up could be 1 day up, 1 day down, 1 day up, 2 days up, half a day down, half a day up, right? All that matters is that we close higher on Thursday than we did on Monday.
What was the closing price on Monday again?
For when you said?
Monday.
We 87.6 was our low.
So it's the low, not the close?
Yeah, just the low. You don't want to take the lows out.
We're getting so close.
Trump's done. Okay.
I can hear him talking still. Maybe my video is delayed. He just totally deflected a question from like somebody at CNN.
Fake news. Next question.
Basically, yeah, he basically refused to answer. But yeah, that was it.
Let's take a little sentiment check. We'll do our own little sentiment check. All right, polls up, gang. How are you positioned after FOMC? Bullish, bearish, on the sideline, or fetal position?
Downward dog.
It'd be interesting to look at that poll in the next couple hours. We'll let it run for the next 10 hours.
You can make a poll on YouTube how you feel about that. Ask people in YouTube. I think it's easy.
What I did.
Ah, you did? Okay.
Mm-hmm.
I go check.
Yeah, bullish would encompass if you're just looking for a dead cat bounce. Bullish doesn't mean you think we're going to get all-time highs. It just means you think the relief rally is going to continue. All right, let me refill this cup of coffee. I'll be back. Give me a second.
This looks like a double bottom. Double bottom. Yeah, well, Delta, due to technical difficulties.
Dbloc, are you talking?
Created. So it's a really big
What's good, chat?
What's up, Dbloc?
Chilling. Just finished digging into the rest of the data from the day. I'm exhausted. I need to get a big steak.
We still have a little room to short this, right?
Yeah, we don't have confirmation of the loss of support there yet. Support is support until it's not. And it's a bit of a support range, not just a line, so. But once we dig into these liquidations, that's going to be a fast move. If you're trading the 5-minute scalp strategy, your short came in as your 13 crossed your 50 up here. And you had a couple of, like an hour of holding your breath there. But we went red dot right around here.
Can you take a look at ETH whenever you get a chance, please?
What the hell? ETH looks strong. I mean, ETH does have some mean reversion to do. Probably mean reversion to the 50, 314. 50, 200 EMA. Big gap in the VPVR. But as far as how it's holding up, it looks great. But I could see an intraday move down to like 315.
Thank you.
Yeah. I don't think ETH is done though. Like I said, I think this is just a correction. My measured move for ETH is 357. That's my target 3. Target 1 and 2 already hit. W on Sol still valid. Retest of the W on Sui. Retest of the W on Link. W on LTC still valid. Jasmine looks weak though. Jasmine's still basically an accumulation. Litecoin rejected off of its W break, but that's not a big deal. It could just flag out here. Link popped and held ground. Measured move is 5. Soul still hasn't made its way up to its W yet. Flagging out. Clearing this vector. Still an accumulation.
Do you think Jasmine has a strong future?
Yeah. Yeah. My thing with Jasmine's always been the team. They're pretty isolated as far as they don't count on other projects to succeed. And they've got a ton of like old Sony guard on the board. So I think there's plans for Jasmine that just haven't played out yet. Jasmine's obviously one of the more speculative trades that I'm holding right now though. And to be completely clear, I killed Jasmine in 2020. And then I killed it again for like a 15, 16x at the beginning of this bull run. So I have some wiggle room to play around with Jasmine. Right? So if it goes bad, it's got to go super bad to really affect me in any way. But Jasmine's always been like a bit of a passion project for me. We used to follow Jasmine when we had to go on Google Translate and translate everything from Japanese before they even cared to let anybody who spoke English understand what was going on. That's kind of what was so interesting to me. Right? There wasn't a lot of material on it. I mean, you could get it if you really wanted it, but nobody was really talking about it until it went crazy. That was right around the time like when Soul had finished doing its thing, that rotation that went to Jasmine, Gala, Crow. Man, those good times. All right, let's see if we sweep these licks. I know it sucks to go down and shit, but at the very least, we've called this entire down move, right? It's not like we got stuck at the tops. And maybe some of y'all might be stuck here if anybody FOMO'd into the lower high. But we warned about FOMC being volatile.
Dbloc, you know, nowadays a lot more people are getting into crypto, right? So, like, people have more trust into crypto nowadays. And do you think it's gonna affect the cycle? Like, you think the cycle is gonna move a little bit different than before?
I mean, we haven't seen it yet. We've seen like the absence of it, really. More old money is comfortable with investing in crypto now because the people that they respect in on Wall Street are talking about it, right? But the general public is not here. And we know that because alts didn't run. We know that because we didn't have blow off tops, right? They're the ones that buy our bags at the top into irrational market values. But we know why they weren't here, right? There wasn't a lot of money in the system. The money that was in the system, we drained out of them early. And they ran with their tail between their legs. I would worry more about the effect institutions are going to have, right? That's the big money. The next time we get into quantitative easing where everybody's got money in their pocket, then we can start worrying about retail coming in and pushing things around. But for right now, if this is PvP, then the people we're playing against for the most part are the institutions, right? Those are the ones that could do damage if they want. But adoption inevitably will affect the cycle. Right? Bitcoin will slow down. It'll get too big and too fat to move the way it usually does. And we see it cycle into cycle, right? We see the diminishing returns. Luckily, there's still plenty of volatility, but yeah, eventually the vol will come down to closer to like S&P sort of numbers. Hopefully by that time, everybody has enough Bitcoin to where that's exactly what they want to happen. You're done with it going down 80%. You've already accumulated everything you want, and all you want is year-over-year returns. Right? Just hold what you're worth, and give me some returns year-over-year.
Dbloc, how long you think it's going to take for US to completely digitalize the US currency? Like, let's say, like killing off the USD and turn it into like a digital completely.
I don't think they'll ever stop issuing fiat. But the real question is how long until most Americans are using a digital dollar more than, I mean, I don't know about y'all, but I don't walk around with a ton of money in my pocket. Right? Even on the legacy system, we're really just walking around with debit cards and credit cards and shit, right? Like the amount of Americans that are walking around with a wad of money in their pocket are probably pretty low. Even if you don't have credit, you got your debit card linked to your bank or whatever. But they'll never get rid of fiat per se. We need it for transactions. It's going to take older people sort of dying off respectfully for that to happen. But I mean, like I said, it's elementary, right? At the end of the day, most of us aren't using paper money right now. Yeah, it's not going to count for everybody. I'm sure some people still are. Just go into most stores and try to get change for $100 bill and just watch the face on the cashier. Like you just kick them in the nuts because you're about to take all their change.
Yeah, there are some coffee shops in LA don't accept cash anymore. Strictly like a credit or debit card.
Yeah. It'll get to the point where it's not safe to have a big box full of cash in your store. Especially in LA. But yeah, they'll never get rid of paper money. We need paper money that's actually backed by something is what we need. right? When that paper money was a contract and you can go into the bank and get gold for it, that's when it was important.
Eventually, the fiat is going to be backed by just gold, right? Like, so they don't need cash anymore. So digital fiat is going to be backed by gold, right?
Well, the Bitcoin maxi dream is that Bitcoin will be used as the backing asset. But like I said, that's a dream. I don't know if we'll ever go back to the gold standard. There's just too much control from the government to be off the gold standard. People don't understand what having $1 on the gold standard means. That means that's the last time when you could actually save. We could actually take the money you earned in 1 year, save it, and in 3 years it was worth more than it was when that's because it was actually backed by gold. Now you're getting debased, right? Your dollars lost. $100 is worth $50. $100 in 2020 is worth $50 now. You still have the $100 in your bank, but you can only buy what you used to be able to buy with $50 in 2020, right? The purchasing power. When your currency is backed by gold, that $100 would have been worth, I mean, shit, with the year that gold had, $100 might have been worth $200 by this, by 2026, 2025. You can't do that. They need to keep you working. Need to keep you working and spending. And the best way to keep you spending is by debasing the shit out of your dollar. It keeps the wheels moving, right? It keeps the gears going.
But who's going to be working after all these robots replace us?
Not us. Be on like a universal basic income by that point. Tax on all AI companies of about 5% off the top that goes towards UBI for safety reasons. Not because they care about you. They just, you can't live in a society where everybody's hungry. It's not safe for the people that are rich, basically, right? So UBI will come as a safety measure. But that's not how they'll paint it.
I don't think they're going to do UBI. Maybe for a little bit. But,
They have to. There'd be too much unrest. If AI really takes the jobs like we're thinking is gonna happen over the long term, right? I'm talking about when everybody's replaced. You'll have to. There would be people dying of hunger on the streets. That's not good for business. Don't worry, it'll just be some stable coin. It doesn't. They can print as much of that shit as they want.
Yeah, but the government might, create new laws saying like companies are not allowed to use their own robots, so they're gonna have to rent it from individuals. So individuals will be responsible to maintain and fix their robots. You know what I mean? So basically, you're gonna be renting it out to corporations, and they're gonna be using your robot and pay for your robot. You know what I mean?
I mean, I guess, but the government better start making some laws that benefit people, because now it's gonna get ugly. After watching the last 2 AI agent trading competitions, I feel like my job is safe for the foreseeable future. But I can't say the same for,
When you say foreseeable, does that mean like 10 years?
I mean, I don't know. Like, we're talking about Moore's Law on, like, steroids, right? Like, it's AI is advancing faster than I think anybody realizes. And then that, in my opinion, it's probably going to be exponential. So we get to some sort of plateau, but I doubt that the plateau is going to last too long. Every AI agent in the world working on it.
Yeah, Dbloc, I have yet to hear your opinion on think AI will hack, like they're saying now by 2030 AI would be able to hack all of our wallets.
Nah, I don't know about that. If we don't do anything. But you got to remember, like, what they're talking about is like quantum computing. AI can't do it by itself. It's not a processing issue. It's a computational issue. But with quantum bad guys come quantum good guys. And it's something that we see coming into this. All you have to do is just adapt your security, work to higher encryption standards, stay ahead of it. I tell people all the time, if you're worried about quantum computers cracking shit, you need to be worried about the money in the bank. You know, those ones and zeros that aren't backed by any sort of real money that's sitting anywhere. It's just poof, poof, fairy dust. With probably way worse encryption than anything we're using in crypto. It's an easier target, right? It's a softer target. You're going to go after crypto where 10% of the world has their money, or you're going to go after the banks? So I'm not saying it can't happen, but by the time it happens, other shit has gone horribly wrong. You know what I mean? Like,
I got you.
but yeah, diversify your wallets, man. Don't keep everything in one spot. Just in case.
Dbloc, any idea what the next narrative is going to be? I'm trying to get like in and out of stuff. Pretty bored out here.
My narrative's boring right now, bro. I'm only looking at ETF alts and shit. This market's gonna have to prove it to me before I dig too far down into risk.
Just go all in blind and start praying.
Right. Now, I have confidence in a relief rally, but that confidence doesn't extend to all alts. It's a spot, buddy. Black or delta neutral trades, right? Meaning somebody wanted to sell a Bitcoin and somebody bought that Bitcoin from them. It didn't push price at all. Green is a bullish delta, and then your red is a bearish delta. Delta neutral buys and sells don't move price. And then your aggressive buyers and sellers are in yellow. Anybody wasn't here before, what we're trying to sweep is this liquidity here. Hold on, let's refresh. Drum roll. I already took the first little chunk of it. Measured move from that bear flag is 903, but the majority of that liquidity is sitting in the psychological ranges, like I was saying in the pin message. Take it easy, Doge. Give me 1 second, y'all. Someone's at my door. Be right back.
Where the bulls at? Thank you, Dbloc.
Almost there, yo. Yeah, I'm looking for a stopping volume candle anywhere between golden pocket and cyclo. I told you on the pinned comment, if we lose the SR flip, is right here. That we would sweep liquidity all the way to 89. Right? The heat map is lit up, or was lit up in that range. We've already taken a pretty good chunk out of it. Let's refresh. Yeah, a little bit more to go. See anything to beat up super bad? You still haven't come down. We were talking about coming down to that 50 EMA for ETH. Almost there yet. Not yet. Yeah, that's a stopping volume candle. Very small. You want to look for a bullish engulfing, which is almost impossible to get unless this candle ends up red. 1 ATR. This is not financial advice. This is just for the snipers. This is if you get your bullish engulfing. This candle has not closed yet. Setting it up. That's gonna invalidate. Yep. I'm looking for one a bit deeper down into this psychological range personally. That's what I want to see. Let's bring up our volume. Measured move for the bull flags already hit. We're into that potential liquidity sweep, basically. We're still smack dab in the middle of that larger bear flag, guys. I guess I can go over this now. I was working on this chart earlier. But this is the bear flag on the daily. Basically right in the middle of it. So somebody was asking about how the bear market plays out. And I realized I hadn't really covered this much. Get rid of this. And let's go to the weekly. So the bear markets have 3 stages. Right? Mean reversion, which is the first stage where you come off of all-time highs. Let me turn this on. So your mean reversion phase is where you come off of all-time highs and revert to the 50 EMA. Right? Or let's track this better on the 2-week. Right, because the 2-week is what's important now. So the first part of your bear market is a mean reversion to the 200, right? Or the 50 on the daily, but 200 on the weekly. Once you get that move, you go into the second phase. The second phase is consolidation, right? Inside of this consolidation phase is where we get our dead cat bounces, right? Price comes down to the 50, consolidates, and gives you your dead cat bounce, which in this case was what, 40%? Right? Now, what's important about this is a couple things. One, remember that it's the 50 on the 2-week where this consolidation happens, right? And take a look at how long this lasted. Right, it's 112 days. If you take it just from when we touched the 50 to when we broke it, 98 days. Right. After that point, I guess it's important to bring up your Ichimoku too. Hold on. There's a couple of different metrics. Once you break through your cloud on the Ichimoku or you break the 200, you go into that expansive sort of move, right? And at that point, the bear market's complete. This is where FTX happened, right? You can consider all of this part of that move, whatever, same shit. Right? It happens every cycle. Mean reversion down to the 200. You get a consolidation. Or in this case, how long was it? 154 days. Right? Inside of that consolidation, you get your relief rally, which was 46%, 49%. And then as that 50 EMA breaks, you get your final sweep. Right? Capitulation. This is when everybody gives up the idea of any sort of more up and capitulates to the losses and sells at a loss. Right? This is the most aggressive part of the bear market. So as far as we go back, we can find it, right? Mean reversion to the 200. Consolidation. This dead cat bounce was a 2x, 100% on the dead cat bounce. And then as you break that 200, as you break that 50 on the 2 week, you get your capitulation. Right? So 3 phases. Right now we're in what? Right now we're in consolidation. Right? We've seen the average of these drops be between 200 and 120 days, but there's been diminished returns. Right? So let's not. We have the technology. Let's do this. Let's not be lazy. Let's see historically how long we have to consolidate. And we'll take it from the time that the 200 was hit or that the cloud was hit. All right, so the first one was until it breaks. Goes under 154 days. All right, so we've got 154 days. No, that's long. That's longer, my bad. 182 days. This was considerably shorter. The time we hit the cloud to the time we broke, 154 days. Right, so 30 less. If this is 120 days, then we know we've got about a 30-day drag. Time that it hit the cloud to the time it broke, roughly 112 days, so about a 30-day drag. So that would mean we could expect this consolidation if that cycle continues, which it doesn't have to, remember. All we're doing is using prior price history to give us a sort of idea of what to expect. We'd be looking at about 80-day consolidation. Which would be about the size of that box. Right, so within those 80 days, I'm expecting a relief rally that at least tests the 50. At least. Preferably even higher, but. And then as we break this range, we have to be prepared for the capitulation. Right, so all of those ideas of an extended cycle, all of those ideas of a new all-time high, once this breaks, we've got to be real with ourselves. Right, until then, yes. Until then, if we pop and we get above and we hold, I'm with you. Let's ride it. But if we reject at 108, or if we reject at 98, and we start threatening these lows, then, right, decisions have to be made at that point. My point of bringing this up is that there's plenty of time left in this consolidation, right? And we haven't gotten a relief rally yet. And we've seen relief rallies everywhere from 40% to 100% in bear markets, right? So let's do the math then. First one was 40%. The second one was 56%. Again, not saying this is going to happen. I'm just saying if history repeats itself, that's a double top off an all-time high. The third one was 100%, but we're not going to do that, right? Chances are. So, in the last 3 bear markets, those were the sizes of our dead cat bounces. And the dead cat bounce happened in this range after we came down and we started consolidating on the 50. Right? Every single time. Come down, hit the 50, consolidate, break, bottom of the bear market. But not before the dead cat bounce. Down to the 50, consolidate, break, bottom of the bear market, but not before the dead cat bounce. Well, you know. Thank you for coming to the TED Talk. There's coffee and donuts in the back. I'll be signing your mouse pads. But yeah, just, I mean, to give everybody a little bit of, I don't know, sometimes understanding how the cycle works and where you are in it can take that feeling of panic away. Could this be the first bear market where we don't consolidate and drop and go absolutely to hell's gate with no sort of correction? Yeah, of course. Does it seem like it's lined up for that? No. So far, it seems like it's just going to play out how it always plays out. You're welcome, y'all. I appreciate y'all for listening. I would have gone through that whole shit if there was nobody listening anyways, just to put it into my own head. It should help solidify it for myself as well. I like turtles. Nah, talking it through helps a lot, bro. You guys think, sometimes I think people think I just say that just to say it. But having to explain my thesis 30 times a week 1000% helps me build conviction. Appreciate you, country. That's funny, Khaled. Nah, we weren't around, bro. This channel's young. And this channel's a lot younger than some of our like relationships are with each other. We were in a different spot before. But this is the first time where like I actually get to run the show. There was so much noise in the last group that we were in. Gloomy. Buddy. Yes. Another thing I wanted to point out, I'm just trying not to take us into analysis paralysis territory, but it is important. Right, so I don't know how many of you use your Ichimokus, right? But I'm going into some rare Ichimoku analysis right now. It's not that I don't like Ichimoku, it's that for me, it's way more valuable on the macro than the micro. Right, so Ichimoku has its baseline, which we've been using as one of our targets, right? One of our measures of are we in a bull market or are we in a bear market? This red line is the baseline on Ichimoku, right? As you break that baseline on the 2 week, you're in a bear market. Right? Price will go up still sometimes, but all in all, that signals being in a bear market, right? That's one of the things that was on our checklist. The only time it hasn't happened is here. During that dip, where we had 1, 2, 3, 4 candles close underneath Ichimoku, right? But that's just one of them. So because of that, we use the span A and span B to test it. Span A and span B is just a fancy name for the top of the green and the bottom of the green, right? If we go to Ichimoku and we go to span A, let's make them bright. And then span B. That bright red. Or actually, no, let's make it another color. There you go. We'll make it turquoise. Fine. Then let me put it up. Alright, so spam B is purple. So since we can't just test or count on the baseline, right? We've counted on, and by the way, we are underneath that 2 week. But now we're in this situation. Okay, we're underneath the baseline, but maybe it's like this, right? This made an all-time high. So now we have to test our weekly. If you look at our weekly, we just touched down to our spam B on Ichimoku. The reason that that's important is because every time we break that, every time we close a candle underneath spam B, that's the end. That starts the capitulation, right? Capitulation zone comes in right at that point. I mean, from the second you break, hard drop, right? But when you test spam B is when you go into your dead cat bounce, right? Test spam B, dead cat bounce, break spam B, bear market. We've tested spam B, and we're in what I believe is our dead cat bounce, right? Dead cat bounce on spam B can be, like I said, 40, 60, 100%, 30%, whatever. We go back to another one so you can see that it's not just a fluke. As you close a candle underneath spam B, right, you get that capitulation. Drop. Get it on 2. Right, as soon as your spans are broken. So we have to watch for that on the weekly. Right, that's like line in the sand, 80. That breaks, things change. But time-wise, we're close to where we should be getting that dead cat bounce. On paper, anyways, right? And another good use of Ichimoku, we'll bring it back up at the bottom of the bear market, but I'm going to give you guys some of the secret sauce for now. We were just talking about what happens when the price breaks your spam B, right? When your trend line or when your baseline breaks the spam B, you get your bear market bottoms. Right? Right as that baseline comes through spam B, bear market lows. Price comes, baseline comes through spam B, bear market lows. Price break span, bear market lows. Shh, don't tell anybody. We got to keep some things for ourselves, right?
Dbloc, do you use leverage?
No, not anymore. On, at least not in crypto. On legacy or Forex, I still do.
No, recently I discovered the marginated coin feature. You know, like there's 2 types, like
2x, 3x, bull bear tokens, yeah.
no, the one that settles with USDT, and the other one that settles with crypto. So basically, the marginated coin
Oh,
So it,
coin margin you're talking about. Coin,
yeah, yeah.
yeah. Yeah,
Even
it's a
with
good way to
1x,
accumulate.
yeah, even with 1x long, like you make more money than you would make in spot.
Yeah, it's a good
And
way
it's
to accumulate.
yeah, it's like a very, very low risk.
Yeah, no, I hear you. I mean, I've gotten to the point where I don't, in my opinion, don't need to use leverage anymore. But it's one of my hard, fast rules, bro. I've been in this shit long enough, and it's important, I think, to know yourself too. Because it's easy to have good rules for leverage, right? But good rules count on you not breaking them. I'll tell you how it runs down. You want me to run you into the future? This is how leverage blows people up. Two ways. The first way is not a big deal. You jump in leverage, it's too high, you get liquidated, you run away with your tail between your legs, you learn your lesson, whatever, right? Like that's the more common one. But then you get people who trade leverage and are successful. Right? And when you become successful at leverage, especially if you're good at TA, it's very, very easy to fall into a trap. Right? At first, you have your set of rules. You've got 20 rules that you refuse to break, and you've kept them this whole time, and that's what made you successful. Cool. Start breaking them little by little. You know, maybe you don't use a stop loss this time, and those aren't big deals. You might get little paper cuts, but it's not a big deal. But it shows that you're slacking on your rules a little bit, right? Then you wake up and you see the most beautiful chart setup that you've ever seen in your life. You couldn't ask for anything more. Perfect stopping volume candle into a big order block, cleared a bunch of liquidations, as everything looks beautiful. And you think about breaking your rules. You think about full porting it because it's such a perfect play, but you don't do it because you're not an idiot, right? So you don't do it. You take a normal trade, and the trade does exactly what you think it's going to do and more. It just goes absolutely nuts. And then you sit there and you do the math in your head on if you would have just listened to yourself. I would have just full ported that 100x. What would I be at right now? And then you forget about it. A couple weeks pass by, and then you wake up and there's another perfect trade. Just like the last one. Everything's exactly the same, and you get that little itch. But you say, nope, I know how this works. I'm going to screw myself if I do this, and you don't take it. You just take a regular trade. And the same thing happens again. And that might happen 3 or 4 times. Eventually, you're going to take it. Whether it's the 5th time, the 6th time, the 7th time, eventually you're going to full port it. And gone. I've seen that shit so many times, bro. I can't even tell you. I've seen it happen to traders that I considered at the time to be way better traders than I was. So because of that, and because I know my psychology, right, I don't play with it. I used it when it was necessary. Like when I started trading crypto, I was 6 figures in debt. So it was either leverage or move to another country. I needed to figure it out, right? Luckily I didn't get burned too bad. Regular liquidations, but I never like set myself back years in trading, which is what hurts, right? People will set themselves like 10-10 set people back 4 years, 8 years in some cases. But I managed to see enough people around me make mistakes to where I didn't necessarily have to go through it. Luckily, and it's probably the only time in life I've ever learned a lesson from somebody else and not had to actually like touch the stove. And every once in a while, the rules get shaky. Like, you guys, yeah, I do TA all day. You see how easy it would be for me to throw 25, 50x on some of these leverage plays with the risk reward that I'm taking and absolutely kill it if I wanted to. But don't think that shit doesn't occur to me. You know what I mean? I think about it all the time. And then FTX happens. And then I don't think about it again. And then when I start thinking about it again, 10-10 happens. And then I don't think about it again. You know what I mean? Longevity, bro. The only way to lose this game is to not be here to play it. in my opinion.
Yeah, I hear you. What on coin marginated, if you're only trading with 1x, um, you pretty much are not risking anything,
Yeah,
right?
no,
Like,
it's.
so it has to go to zero,
I agree with
for you
you.
to lose everything.
I agree with you. There's 1,000% safe ways to trade leverage if you stick to your rules. I just like to swing at the fences. So since I know that's part of my psychology, right? Like I've got to hack myself a little different. That's why I said people's, like that's why it's so hard to give advice and nobody should, right? We don't give financial advice, but people are different, bro. Your psychology is going to determine what's the best trading style for you. Knowing yourself is a really big part of trading. Because if you don't recognize your demons or you haven't made friends with them or killed them, they're going to pop up at the worst possible times.
Yeah, I'm using the coin marginated, like for long term, like for coin accumulation, like for example, like Ethereum. So I just did 1x long. So I bought like 10 Ethereums and I did just 1x long. If it gives me like the 10%, let's say for example, let's just count like one Ethereum, right? I bought one Ethereum at $3,000. And then I just went 1x long on coin marginated.
Mm-hmm.
And if it goes 10% up, right? If you on regular spot, so if it goes 10% up, you would have only $3,300, right?
Yeah.
If you sold it. But with coin marginated, so you settle your contract with coins. So if it goes up 10%, so instead of one Ethereum, you would have 1.1 Ethereum,
Yep.
right? And then you sell that 1.1 Ethereum at $3,300 when it goes up to 10%. So
Mm-hmm.
now instead of and then when you sell it at USDT, at 3,300, so you would have $3,620.
Yep.
You know what I mean? So you making like with 1x long, you making more than spot.
Mm-hmm.
You just because you accumulated coins instead of making profit in USDT, right?
Yeah. Yep. Yeah. Zusi usually trades CoinM. I think Mike mainly trades CoinM too.
Yeah, I discovered that just recently. I used to do just regular like USDT, margins. But now with this, it's like a game changer for me. I don't have to go like 3x or 5x or 10x low. Just 1x, gives me pretty good profits.
It's a good way to wean off of leverage. Yeah. But it does have its downsides, obviously. First, you got to make sure you're holding a coin that you don't mind being underwater in, because if it drops 50%, even if you don't get liquidated, you're still under, right? So you can't do that on everything. But for Bitcoin and Ethereum, yeah.
On coin marginated, I don't think it's 50%. I think if you go 1x, it has to go to zero for you to lose
No,
everything.
no, I'm saying a coin period could go down 50%. So even if you're not liquidated, you're still underwater. Meaning you have the same risks as spot. Or if you get, if there's an auto deleveraging event or something when you're underwater, that's also an issue. It's the exchanges I don't trust, yo. Leverage is fine. I understand the rules that it would take to trade leverage safely. I don't trust the providers.
Which platform do you trade on?
I'm normally on Dexes. My centralized exchanges are just off ramps and on ramps. Yeah, never leave too many funds in any exchange, even if they don't have bad stories, Jeff. We don't do that anywhere else in our life. Right? Like we don't ever like you don't go to Foot Locker and say, "Hey, let me get that pair of sneakers right there." And then here, take all my money and take the sneakers and hold on to them because I'm probably going to want something when I come back next time. But we do it on exchanges. Like we take all our money there. We let them hold the money. We let them hold what we bought from them. And we just hit them with a "I'll be back." Give me 1 second. I'll be right back, y'all. ETH is almost down to that 50. I do want to say I'm proud of y'all because not one single person has said, oh, we're just coming down for that CME gap. And for that, I'd like to thank you guys. CME gap is like 75 cents wide. Nope, I'm ignoring them. Can't ruin it. You think I'm just being funny? Look at Twitter. Word on the street, CME gap. BTC soon fill CME gap and pump again. People are even asking Grok, is there a CME gap at 89K? There's still, reminder, there's still an open CME gap.
You gave them opportunity to troll you now.
Yeah, I opened the door. The CME gap is 144. Excuse me. $144. Screw it. Let's fill the CME gap and get him happy. Whatever makes you buy. Oh yeah, CME, that's what you're waiting for? Cool. Yeah, let's do that. I remember, we're just getting back to our psychological ranges, yo. Remember what I tell you every Saturday when we set these psychological ranges. Right? These psychological ranges get set on Saturday and they get revisited during the week. It's an insurance on that CME gap.
We're loyal to CME, bro.
Yeah. Come on, just take it. You're almost there. Refresh. That's a support resistance. That's not a target per se. But that will help stop price if we get there. And we still have this vector. But the real reason for the season is that liquidity. We've got some excess underneath, but the majority of it, the biggest target is sitting right there. 89.3. Global M2 putting in new all-time highs.
What's your read on Sol?
Sol still coming down here. It just took that vector gap we were looking for. Look at that. Now we just have to worry about invalidating this W pattern. And that is at 1279. But all in all, still an accumulation. Hasn't broken out yet.
Thank you.
Mm-hmm. Stopping volume candle whenever you're ready, market maker. I'm good now. We're inside the ranges. So no rush, but if you're waiting for me, you don't gotta wait anymore. You can just do the thing. Yeah, 89.3. That last move down should have wiped most of this. Yeah, a tiny little bit underneath. This is going to close as a stopping volume candle. Not super impressed with the amount of volume that came in on it, though.
No. It's a shorter's paradise.
What's good, man?
I went to look at my portfolio. It was looking incredible.
Nice.
Well, I don't know if can it be a portfolio if it's shorts?
Of course. Well, technically
Interesting.
not till you take profits, but well, maybe once you take profits, then you can count it. Yeah.
Damn, I feel like I can't close them yet. Like they're way longer trades. Well, last time I was here, Trump was talking and I fell asleep. Now I'm back.
Yeah, you can tell he didn't stop talking when you fell asleep, right? You look at the chart.
Like he's still talking. Or something?
He's like, he's doing a subathon on Twitch. He's gonna be on there 24 hours, saying wild shit.
I gotta get some of this Christmas gift money back, man. Family done hit me up for a band, bro.
Well, I take advantage of Black Friday every year. I'm not playing. I'm getting
Nah, I
those
went to Dick's
discounts.
Sports. Dick's Sports, man. I went on a shopping spree, man. I don't know what was going on, but they had like everything, like all this nice sports stuff was like 50% off.
Nice. Trying to get more active, or you mean for the kids?
No, for the kids, man. I bought them like whole wardrobes of like, I don't know what this brand is called, Mitchell and something.
Mitchell and
It
Ness.
looks like high end, like starter back in the day or something.
Mitchell and Ness.
Yeah, man. I was buying there like $120, $130 sports coats or whatever they were for like $50. Some one of them I bought for 30.
Nice.
What the hell? Loaded up. Got them like 3 or 4 of them each. Got them matching hats for like $12 each. It was ridiculous.
Mitchell and Ness has good hats. You might want to go on eBay. Shit, you might want to flip those presents.
Oh,
Like, look, kids, about your outfits. They're going for like 3x what we got them on eBay. I'm gonna teach you something about trading.
I'll tell him if he takes care of it, he might be able to get the money back when he outgrows it. At least break even. You're right. There, I got them so damn cheap, I could probably flip them.
Know what I'm saying? Not everybody has a sale at their dicks. You know what I mean? So somebody somewhere will be willing to pay you more than you.
Let me pause before I say it, but go look at dicks.
Yeah, I remember that, Brandy. Like 3 Black Fridays ago, they had that 65-inch for like $70 or some shit. I remember a bunch of us in the chat bought some. Letting those shits go on Facebook Marketplace for weeks after that. Bro, I don't know if you noticed, but the government doesn't need spyware to watch you. You just go on somebody's Instagram, tells you where they're at, what they ate, what they're wearing, who they're with, where they're going, where they came from. We giving up all that information in real time.
Renora, they don't want to spy on you cosplaying in your Labubu outfit.
Well, hold on. Not so fast. That sounds like content. Sounds like some good content. It's true though, Renor. It's true. People are so federal right now, and it's the people that you wouldn't expect to be too, which is crazy, yo. Like my little cousins and shit. Like they run around. Well, not cousins by blood, but they run around thinking they're untouchable, and like they put everything on the gram, and it's like, bro, you're going to jail. Like they want to be at all of these. They want to be at all of these. What do they call them? Where they lock down the. My brain is sideshows. Or these takeovers and shit, right? Like, "God, I just got a car and I like my car and we hang out," and it's like, yeah, but like, all right. Shutting down intersections and doing donuts and shit and running away from cops. There's still a little bit left underneath us, but not much. Yeah, that stopping volume candle is valid, but it's not strong. I wouldn't be surprised if we whip it. Bro, if we turn around from here, these CME guys on Twitter are gonna lose their shit if this shit doesn't take the rest of that gap, bro.
Where's it at?
They're gonna be screaming manipulation. That would be hilarious. So that would be the funniest outcome. It's just this dumb CME gap. It's like $100. And everybody on Twitter is like, see, we told you it was coming down for CME. Like, bro, this shit did not. I said it yesterday. I was like, look, we will move down in that direction, but it won't be because we're going to close CME. You know what I mean? It's just because of the liquidity that's sitting there.
Are you taking a swing at this?
Huh?
Are you swinging for a scalp long?
I placed my first entry, yeah, but I 1000% plan on buying lower here. I just swung at it because it met my checklist.
Did you just jump into a toilet? Mad? You sound like you just went into a can.
I'm in the kitchen.
Oh.
I've been like 14 short.
Didn't we close like?
But no, they weren't just open. They've been done open a long time ago.
Neve.
I'm gonna try to get on this scalp long, but I missed this entry here. I'm gonna see if I can get a lower one.
Forgot to put my stop loss in. You know what? I'm not going to stop out of this. If it drops, I'll let it drop. I'll just pick it up lower. My one ATR stop would be inside of the CME gap, and I'm not going to do that. I'll just look at it as my first DCA. Volume more than anything, Musa. You need to see aggressive buyers come in, and you want to see a nice chunky volume spike at the bottom of these licks. I want to see some aggression, you know, some velocity.
That couple of hard taps off of 94.5, man, doesn't look good. Or was it 94.550 or whatever? Doesn't look promising. But we've seen worse, right?
Yeah, I mean, you got to retrace somewhere. All right, if we come through this CME gap, we'll bring in the 7 CME traders on Twitter waiting for it to fill. I'm trying to take a long on Soul.
Good question.
I'm waiting for this thing to rip. I want to ride this vector back up.
Well, how long do you think it'll be before that big bounce comes on Bitcoin?
There's no
I'm
telling,
talking
bro.
about that 30% bounce, like
There's no
time
telling.
wise. I thought there was a measurement you were looking for.
I mean, there's at least within the next 80 days, but that doesn't help anybody. That's a long time. We've consolidated for a very long time in these ranges. The consolidation phase of the bear market lasts a couple months.
Okay. I mean, you could kind of get an idea, though. I mean, if let's not that it's going to happen, but let's say 40, 50K, whatever. So it would be before then.
I just said 80 days.
Okay. All right. Well, I'm just saying at that time for it, like maybe it'll be at like 65, 70, 75K. I don't know.
Now, if we break that low, we've already gone into the capitulation phase. You give up on your dead cat bounce at that point.
So where's your breaking point for the dead cat?
Where we're at.
Oh, damn it.
Where our
Okay,
bottom was in
okay.
the 80s.
All right.
Matt, are you even watching this chart?
That's all I do is watch his chart, sir.
Nah, you might was asleep earlier
Sir.
when we went through it. But yeah,
What do you mean?
I
I know
just
what's
went through
going
like
on.
2 hours of it, like 30 minutes ago, 40 minutes ago.
Oh no, I was asleep.
Yeah.
How dare you, sir? No, it was your reaction. Like, oh, damn, I missed it.
Don't you ever disrespect me.
No disrespect
Coming
at
in here
all.
like Ben Cowan with one crypto coin.
That's true. I can't deny that.
Shit. I was in a bad move.
If that CME gap fails, watch all these Twitter guys will be promoting their courses. It'll be like, you see, I was right. Click on the link and buy my course.
It's funny. All I did was go on Twitter and put BTC, and it was like CME, CME, CME. I'm like,
Pepin comes in, we're either gonna go one leg more down or we're turning around. He's always a signal when he comes into chat.
You know what? I was really surprised. How come that one guy never came back? The guy that shorted at 109K and took it down to 70 something. What was his name? Epic.
maybe he's on
Epic.
vacation.
Yeah. Dude, he's been ghost.
Probably hit his number, man. People go ghost when they hit their number, bro.
He said, screw it, screw us, he's done.
It happens all the time. He'll be back.
I think last time he said he was building a fence or something. I don't know. He sounds very like utility type busy guy.
That was like 6 months ago.
Yeah, but it's funny because he usually does come in when there's high volatility to the downside.
I'm surprised he doesn't have a short riding from 126.
He probably does, man, but you know, he's probably tired of like pleading his case, and he sounds like a really nice guy, so he probably just doesn't want to argue with anybody about it because
I don't know about that. He was having a little bit too much fun.
I don't know why anybody feels the need to plead their case. Like it matters, right? Like it's your trade. If you believe in it, then who cares what anybody else thinks? It's your money. You're gonna lose if you know what I mean.
But he would definitely lay out his what he thought was going to happen, and at the time it was during the middle of the not middle of the bull run, but at the past the halfway point, and so many bulls were in chat. He just I don't know. It just like he was up against resistance of anybody agreeing with him.
Timing is everything, man. Timing is so important. The tree is massive, bro. Look at this shit. I was standing up the other day and I was looking at it on the camera. And I was like, yo, I look like I'm 4 foot tall.
You're partly Puerto Rican, right, Dbloc?
Yeah.
Yeah, you're actually tall. Or like a lot of the Puerto Ricans I know are short, like my wife's family, like the Filipinos.
Puerto Rican girls are short. Puerto Rican guys are tall.
Yeah, that's what I should have said.
Yeah, my mom and my grandma are tiny. Nah, there's space. The camera's making it look like there's not a lot of space. But I'm 6 foot on a tall day. So that tree is at least 8 foot tall.
Anyone want to explain to me that calling someone their race, like Puerto Rican sounds pretty attractive, but then if you call somebody a Mexican when they're Mexican, it sounds dirty. Like what is up with that?
It shouldn't. I think it's more how people feel. I've had people whisper Mexican, and I'm like, that's not a slur, right?
Yeah, that's what I mean. Like
But
it's
if you
literally a
think it's a
nationality,
slur,
right?
but if you're saying it as a slur, then it feels like a slur. You know what
Well,
I mean?
I'm
Some
saying I
people
feel
say
guilty
it
using it.
because some people say it as a slur. Nah, I've literally had somebody whisper that shit. They'd be like, the guy was doing the yard. He was Mexican. I'm like, he's you can say that out loud. Like you're making it worse by whispering it. Like now I'm really thinking,
Yes. Stupid dude.
Yeah, they do that a lot in West Coast.
Which is surprising because the West Coast is like, huge Hispanic population. You would think that it would just be, I don't know.
You want to have fun, call a Puerto Rican Mexican, or
Yeah, 'cause I would
Dominican, or
not do
Cuban,
that.
or anything for that matter.
I mean, I know
Depends on
you'll
where
just.
you're from.
What's that?
Depends what part of the country you're from.
What does?
The way you say that depends on where you're at.
Oh,
If you're
and I thought you meant the other way around. It meant what part of Mexico you're from, but you meant what part of the United States would people
yeah.
use it as a derogatory term or whatever. I also was thinking like what part of Puerto Rico. I was like, you don't have a lot of options.
For example, if I was in New York and a Puerto Rican said the N word with an A on it, nobody would even care. But over here in Missouri, if that happens, it's going to be a problem.
Read the room.
But is that a thing, Dbloc? Like, even though Puerto Rico's pretty small, is like there's different types of Puerto Ricans from the different
Yeah,
sides of the
hell yeah,
island?
hell yeah. People from the city and people from the campo completely different.
Wow.
Like someone from Georgia versus someone from New York, whatever.
Because like Hawaii, man, pretty much you can go to the Big Island and then turn around and go back to Oahu, and they're all like same accent, same culture. You know what I'm saying? It's like the Hawaiian roots are super deep and proud, and I mean that's what I just said is not always the case. It's just through my experience I've noticed that. I want to go to Puerto Rico so bad, especially after Peter Schiff is freaking upselling it so much.
Right, because he's going to be over there surrounded by crypto heads.
Yeah, I think he's getting used to the like, come on in, the water's warm. I think he's like whenever he debates a crypto person, he doesn't seem like he's never really struck me as an angry guy. Like
No, he likes the
he'll elevate
attention.
his voice. Yeah. So maybe he's okay and he'd be okay. He's got to be loving it right now though. With all this metal
Bad over here,
garbage.
bro. You know what? I ain't never had nobody call me a culture vulture in New York or over here. They're so whack that they'll say that.
You worry too much about what people say.
What's a culture vulture?
I don't give a damn what they say. I'm just telling you what they do. It's a term that blacks in the hip hop community use to deem lighter skinned people in
No,
the
it's
culture.
a term that's used when anybody makes money off somebody else's culture that's not part of the culture. That's meant to that's trying to come in and just make money.
I'm talking hip hop though.
Whether it's crypto, whether it's hip hop, whether it's sneaker selling, whether it's business,
So they're
whether it's
bandwagon,
fashion.
but they're capitalistic bandwagon.
Yeah, you're just in it for the bag. Right? You're like placating to a certain crowd just to get their money.
But it's so bad over here. You don't even have to be. You don't even have to be white, and they can call you that. I told the stupid ass dude, I'm 10% black, fool.
It's for me, it's not a race thing. For me, even if you're black and you come from country or you come from rock or something, and you're now dabbling in hip hop just to get a bag, you're a culture vulture. Like that, you don't. It doesn't have to be a race thing.
It's a race thing over here when people say that because they deem that the hip hop culture is a black thing. Now, see, you're thinking New Yorkish is not like that everywhere.
Well, New York created the culture, so that's what I'm saying. Why are you worried about what somebody in that state thinks hip hop is supposed to be?
Bro, they're racist. They're racist. That's why they're like, it's horrible.
I want to say that I think Eminem kind of broke that argument that it's only a black thing because he's pretty freaking awesome. But I don't know. What do you call his? You don't call his hip hop though, isn't it? Something called something else.
No.
Oh, okay.
Eminem's hip hop.
Well, they'll take it all the way back and they'll go back to the start and they'll be like, oh, well, Hispanics weren't really part of it because of this and that, and that's not true, blah, blah, blah. Culture.
I've never been around anybody in the culture that has those arguments. Those are arguments from people outside of the culture.
They're extremely whack, bro. Those from the racist side where they don't want to see anybody who ain't black doing hip hop.
You're probably not going to end up selling them records, but they're not the culture, so it doesn't matter.
People in the tribes are super protective, man. Like I can't, like I'm not a bandwagon. Like I wasn't interested in medieval and Viking stuff just because the Viking show showed up. But I get thrown in that category because I'm not a direct descendant. Like I'm my I have Nordic, like I'm like 75% Nordic, whatever. But I really don't have any like cultural connection to
Just imagining somebody coming up to you saying, "You're not a real Viking." Like, excuse me, you're not a Viking either, bro. Let's
exactly. They don't even exist.
Let's take a deep breath here.
It's
funny.
just a passion I love, you know, and as you get older, you want to know like where you came from, and you start doing a little bit of genealogy, and it's kind of interesting to find out where your roots. And like I took that like test or whatever, that DNA test or whatever to verify. So it's not like I'm making this shit up, but the ones that are super into it, like paganism and whatnot, they're super protective, just like any other tribe is protective of
Yeah,
their
I
people.
imagine. Tradition, right?
Yeah,
You don't want to trust the tradition in the hands of somebody who you feel doesn't respect it.
you got a tan, bro. Culture vulture.
One thing that works for me is I'm pale as hell, so they're like, okay, you're my people.
Oh, well, then
I
it works.
I check all the blocks. I got ice cold blue eyes with pale white skin.
Oh, well, you've reversed the standard you're in. And most of the guys I'm talking about on the reverse end of it, from what I'm saying, is they're like what you call 5%ers.
You're not
They're
gonna
like
stand a
yeah.
chance with 5%ers, bro. I hate to break it to you.
Well, a lot of them they take claim to hip hop. They're like that's theirs.
Just a little circle that you're in, maybe. That's woo shit. Old
Oh,
school New
they're
York
definitely
shit.
around. They're around for sure.
But yeah, controlling hip hop, nah.
Well, like you said, Dbloc, it's even before algorithms were a thing. You still control what's like you pay attention to the stuff that, and I do this. Like the algorithms accent it more, but like I definitely pay attention to stuff that triggers me more, regardless of the internet, right?
The shit you like, you look at and you keep it moving. The shit you don't like, you send to your group chat. You get in arguments in the chat about it. You go back and forth. And then before you know it, that's all you see.
Yeah, and that's the as for my own piece, I try to filter out I try to pump up the stuff that I enjoy and filter out the stuff that I do not like.
Techno Viking is a legend, bro.
Dude, I love him, man. Somebody recreated him, like an AI version of him with some new music, and it's actually pretty damn good.
Techno Viking was rolling his balls off in that video. Dude passed him that water bottle and put the battery in his back. As soon as that first sip of water came in, oomph, 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 oomph.
Yeah, it was perfect. You couldn't plan that.
Dbloc, what if you came out with your own like little like music clip that was totally okay to use? It was like, you know how like Crypto Banner does, where it's like
Yeah, like some sort of intro or something like that. I'd look into it more when I started doing when I start doing recorded videos. Into that.
Like a little clip, like a little break beat or something.
I swear, dude, you need a theme intro for every character that can contribute to your channel. You definitely need you'd already got one for Zeusy.
I'm so hands-on with this type of shit is my problem. Like I'm a control freak.
Oh, Dirty D, I was saying that they recreated Techno Vikings like they took the original Techno Viking video and they recreated an avatar character that looks real, and they played a music video that was like human made music. It wasn't AI music. It's just that he himself was generated, and it almost looks just like him, and it's really good. They're like little TikTok shorts or Instagram shorts. It's pretty freaking good.
Yeah, Brian, I'm looking for it to sweep a little lower here. Yeah, I agree, Serbo. It's not I don't say it like if I look at it like that's a strong suit. I know that's something I got to work on. But most of my life, either I got it done or it didn't get done. You know what I mean? So that builds a certain like.
Well, you want to hear something funny? During the prior uptrend we had before we came down here again, I was rudely removed from my hamster position.
Yeah, liquidated or they delisted or something.
They stopped me out at my entry. It came back up and got me. I was very surprised. And I didn't get a chance to open it back up. It might be too late to go look at it now. Let me go see.
Are you saying they just closed your trade?
Liquidated them.
Oh.
Yeah, they got me out. They liquidated me, but it was very small. And like the liquidation literally was my stop out. That's how I play that.
Well, good for you, man. I love your defensive strategy.
Yeah, but I kind of feel weird. I kind of want it back. So I'm going to go look at it. It was either that or Kanye coin, one of the two. Yeah, it's too low now. It came back below my entry. I'll have to see if I can get a bounce on it. But the good news is I got a chance to open up like 4 or 5 more that were even better.
Think you might be over trading?
No, I waited till everything was all pumped up and then I started accumulating.
How many open leverage positions do you have right now?
14.
Okay.
What?
Nothing.
They're small.
I'm surprised Dbloc didn't pick his mic up and just drop it on his desk and walk away.
What do you mean? These are good. They're all doing great.
14, and then you hear this thud.
It's just my job to throw it out there. If you don't think you're over trading, then cool. But sometimes people over trade without even thinking or like questioning it.
Dude, this is comedy gold.
As
man.
long as it's enough for you to, as long as it's enough for you to handle, then you know.
Because you think that I opened those shorts at average levels. These shorts were open up at, most of them were open where these trash coins were doing these giant, like 200% wicks with little tiny wick lines all the way up at the top. And I'm like sniping them and entering there on the short.
Okay.
Here, let me, I'll show you.
You should stream it, Dbloc, on your channel.
Okay, let me share my screen.
What not to do with crypto Cypher?
Check it out. Anybody? I'm sharing my screen. Jacket.
You're just spinning. Like it's not showing me your screen. Stream failed to start.
Yeah, I'm spinning too there, E-Man.
Might be the PC.
You're there, man. Might be the PC.
King, you got an open mic, brother.
Email. Looks like you have notification on TikTok.
Did you see it?
No, we were telling you that your
Yeah.
stream is not engaging.
It's all good though. Like I said,
Oh.
I just wanted to bring it up just so you can have it in mind. That's all. But yeah, it wasn't showing your screen. It was like just loading.
You're probably shadow banned on Discord.
No, it's probably the PC.
I know. I'm trying to make him paranoid.
Is it working now?
Yes. I see how you can trade on your phone, man.
Yep, those are 14 open positions.
Looks like you're winning, dude. You just need to throw a little bit more in there.
That's it.
I'll be right back, y'all. Then.
My bad. My phone died. What'd you guys say?
I was just saying it looked like you were winning, but you need to throw more money into your trades.
Yeah, the biggest one I think is up like $80. It's off of like a couple dollars though.
I think you've proven that you know how to pick them. You just need to take more risks.
Yeah, man. I just got to put more into them. But so let's see if I can get a little more aggressive. If we can get like a big bounce or something, and we can get another one on there. Yeah, I think I know how to pick them. I think I'm getting good at that. I just got to get braver to put more than a couple bucks on it.
Well, I mean, if you're at the computer or if you're at your phone trading, then no big deal. But I wouldn't be able to handle 14, man. I have a hard enough time handling 3.
Oh, it's all good. I'm not saying for you to do it. I'm just saying.
Oh, I know. I'm just.
Watch what I'm doing.
I mean, that's what you do. Like, don't you trade during the day or something? Like, that's what you do.
Yeah,
right?
those are my trades. They're all short, and I got spot that I haven't been touching. It's horrible. That's my 10%.
$2.5K Bitcoin at 89.1.
I'm waiting for that big bounce on Bitcoin so I can, I guess, TP on spot. I guess. I heard you did a big TP the other day, Jacket.
Yes, dude. On it was the. Let me see what dip with that was. It was on the weekend. And hold on, let me see here. Yes, it was on Sunday, dude. I got in at 13.2 on Link, threw my entire portfolio at it. Then got out at 14.96. Got back in at 14.2 and rode it down to 13.9 and then rode up that freaking Powell pump to 14.8 and then got out. And now I'm trying to get back in.
Gorilla.
So that was 13% plus. %. So I'm up about 20% in less than 3 days. And for me, I'm proud of myself because I've been doing nothing but pulling myself out of tough positions for the past 4 months, 5 months.
Yeah, man, you're playing the game on extra hard, and you're maintaining.
The key thing is, man, and I know what Dbloc says, and I agree with him to leave a runner or whatever, but what's been working for me is just getting completely out and letting it dump and then getting back in when the RSI is completely tanked and getting back in, rinse, repeat. I know it sounds elementary and I know it sounds like duh, but like I just been 100% getting out and having that money to just get back in when everything goes crazy red for a couple of days. I've been leaving runners for the past 5 months, and those runners violently go down quicker than my pump. And so, let's say I have 75% of my portfolio, it goes up 7%, whatever, and then I keep 25% of that left at the top, and then that top goes down 25%. So I've just mathematically just erased my 7%, right? And I've been doing that for months, and I haven't really, the only thing that hurt me was the 10th. The 10th really, the 10th was a big boo-boo for me. I didn't lose, but I had the DCA hard to get out of it. But most of it's just been really bad trading, man. It's been bad, like just not getting out at the tops. And I know that's hard, finding out what are the tops. And I think for me, what's been working for me, at least on my coin, is watching the RSI and finding divergences. I'm not going to say what my portfolio is because I just don't think it's necessary, but I pay huge fees to get in and out on Coinbase, like big time for doing that. But I only do it when I know that, we are like seriously in the red, or I'll sell when we are seriously in the green. Coinbase is a pain in the ass. I don't know how to say your name. Is it Gecko? Yeah, no, I'm not gonna lie. I it's just easier. It's easy for me, being someone who doesn't sit and watch my trades. But I agree, there could be better. I have a love-hate relationship with it. It's great for end of the year taxes, though. The tools for doing your taxes make doing taxes so easy. That's one thing that I do love about it. I know that's pathetic, but it's kind of nice. I would say the biggest pet peeve for Coinbase for me is, and it's better, so I don't want to completely, crap on it, is it tends to always go down or not respond at the most volatile times. You've heard people on this channel say this before, but it's literally true. It's like a meme at this point. It's no doubt that you're gonna be in a high volatility and you're gonna want to get into a trade or get out, and you're just frustrated that it's not going through. It doesn't even matter if it's stop loss or whatever. It doesn't matter. It'll just literally ignore your order.
Yeah.
Speaking of, where's Drew been, man? I missed the my weekly dose of degen updates.
It's definitely been getting a little bit quieter.
This ain't shit. Wait till we're in the middle of the bear market. Yeah, ghost town.
We'll be here.
Come on, man. You got to have some strategies for that. Some games or something.
Oh, I'm not worried about it.
Well, I mean, for us, like, we need to do something that's fun. Like, maybe if Grand Theft Auto comes out, we can actually watch you get your ass kicked.
Yeah, right. Grand Theft Auto comes out.
You'll be trading on it.
It is true, though, that they're going to do the same cycle where they're going to do only single player at first, and then the multiplayer comes, like, what, a couple years or year after, something like that?
Yeah.
Because, like, Grand Theft Auto, like the current one or the old one, is super popular online, man. I don't really understand it, but I guess it's kicking it.
I watch an unexcusable amount of GTA RP on my free time.
It's funny, man.
You talking about where people like just play online and they role play?
Mm-hmm.
Yeah, dude. Yep.
It's hilarious. I just watched some.
It is, dude. I'd be crying sometimes
It's
watching
the
some of
funniest
that
when
stuff.
someone goes in there and starts screwing with them because they take it so seriously. And in some of these servers, you can get banned for not RPing. So, like, you're literally not allowed to break RP. And then someone comes in there just trolling. It's the funniest shit ever. It's so serious. Did our CME traders get left behind here? Is that what's happening?
I don't know his name. Maybe somebody can, but he's like an Indian dude and he plays a cop and he only goes after minorities and he tries to like he tries to like say it's the way his accent is funny. He's like he'll pull somebody over or they'll be walking and they'll barely move and he's like, "You were reaching?" He'll shoot them because he thinks they're gonna pull a gun. And it, dude, I cry every time I watch his. I wish I could remember what his name is, and I can't tell if he's trying to bring awareness to like cop brutality or if he's really like a racist who's like getting away with it. I can't tell what side he's on.
Oh yeah, the guys that role play as the police officers are hilarious.
Yes, dude, I mean, dude, it's funny, man, and I don't doom scroll, but if I see that, I stop and watch it.
Then
Struck,
there's
is
guys
that
on there
is
that do dating
oh yeah.
or role play dating, whatever they want to call it. But that is hilarious when they catch the other one cheating and all that.
GTA RP got big during COVID. You weren't gonna stop these kids from living their lives. They just went online with it. You know what happens when you get a generation of kids that were socialized in a GTA server? I guess we can't complain. We were socialized in Modern Warfare 2 servers. That's way worse. Way worse than any GTA server I've ever seen.
That's where first-person shooter shit talking was born.
Oh man. That's what I'm saying, Freck.
Oh, I got an announcement. My birthday is at 12 a.m.
Nice. Oh yeah. Happy early born day.
I'll be turning 37 years old.
Don't dox
Wait,
yourself.
my bad. 47. Oops.
God damn.
Dang it.
It's a
Forgot
rounding.
about that.
It's a rounding error, bro. It's not a big deal.
How did that happen? Damn it, young man.
The alternative is unacceptable.
I wish I was 37. That's a big 10 years, man. That 37 to 47.
They're all big. Shit. 17 to 27 is crazy. 27 to 37 too.
Yeah, but once you get up here, you really start feeling it. Like your body starts feeling it.
See, that's the thing, man. For me, it's the opposite. Like I was so beat up from the military, and I just had that attitude where, oh, I'm just beat up. Like I can suck it up. It's just pain. And I found out the whole time I had real problems that surgery could have fixed. So I actually feel better in my early 50s than I did my 30s and 40s. Does that make sense? Like it's weird, man. Like just stop being like the best advice I could be for the hard asses that got the big like I'm tough, I can handle the pain or whatever. Just go get fixed. Don't waste your freaking 30s and 40s being in pain. Go get fixed. I know some people can't, so I feel bad for that, but if you have, any sort of health insurance, like go get fixed. Yeah, dude, I'm almost gonna be 51 soon.
Gloomy's like, you ever seen the meme with the dog that looks at the owner all crazy, like when he tells him he's gonna get fixed, and the dog's like, it's like, but I don't. What if I don't want to get fixed?
Well, that too. I mean, if you knock out your kids, man, you can get snipped. I did that too.
That's too funny. But nah,
But
there's no reason that you can't. There's no reason that you can't feel as good and be in better shape than you were in your 20s and your 40s, or your 50s, or your 60s. You just can't wait till you're 60 to start that shit. If you make gym a lifestyle, make gym a routine, you will. It's not about getting older, right? It's quality of life. Everybody wants to live till they're 90, but nobody wants to be bedridden from 70 to 90. Right? You want to live to 90, walking, talking, being able to pick up the grandkids. If you fall, you can get yourself back up. You know what I mean? If you stumble, you have enough core strength to keep yourself from breaking a hip. Like, all of these things are important, man. We've gotten by way too long just sitting and just chilling because we're young. You know what I mean? Like, but eventually that shit catches up. And if you don't build those habits now, it's going to be impossible to get 60-year-old you off the couch to go work out.
Yeah, and diet too, man. Like my big thing is I just changed my diet and stopped taking in calories and sugar. Like I'll still eat sugar every now and then, but generally just not eating like I was 28, like that was huge for me. Like I still am in I can get into serious pain if I do too much weights, but I tend to do what is that rubber band, like what is that called?
Resistance. It doesn't even matter the type of exercise. Just break a sweat. Just make sure that you're working out enough to exhaust yourself. And the good part is if you haven't worked out in a long time, your workouts are gonna be like 20 minutes long. You're gonna go to the gym, you're gonna be exhausted, you're not gonna be able to pick up a single other weight, and you're gonna go home and you're gonna get the same benefit as somebody that was in the gym for 3 hours. When I go to the gym to work out till exhaustion, to where I'm like I can't even move, like it's gonna take me 2 hours.
I love that though, man. A lot of people, and I know you don't need the military to realize this, so I'm not trying to upsell myself, but I did not know how much the human body can put up with until I was in the army. And I think somebody who, like you, who lifts weights or any weightlifter, starts to tend to realize that real quick that the human body can put up with a lot. And most people don't know what that's like.
Yeah, it feels good, man. I know, trust. I was the laziest person ever, bro. Like I was lucky. Like I just held muscle mass from my teens and just never went anywhere. So it's like I never had like that. Like I was super scrawny and I had to go to the gym to, like all of that. So I had to force myself to go to the gym. But once it becomes part of your daily routine, your body craves that shit. Use it or lose it.
Yeah, dude, I go out and split wood. I have a automatic splitter, but I don't use it. I only use it if I get really behind, and man, I just get smoked. I do that for like 30 minutes, and I am so like my arms are rubber band, and I'm like, yeah, but it do like it's utility. Like I get something from it. I get my wood. I get my wood. I get some wood, and also get a workout. I know it's still a little bit too violent impact, but it's still rewarding without a helmet. You said it, not me.
About a sauna.
Give me a second, yo. I gotta go handle something real quick.
I saw these little portable saunas they sell. What's your opinion on that? I'm talking about just sitting there and just sweating it out.
I mean, you could it, yeah, but it'd have to follow through with diet too, man. Like you can't just, and I don't mean you, but I mean anybody. Like some people like doing it because it supposedly gets the toxins out of your body, but I don't know, man. I'm not. I just think it's just easier to go work out and let it sweat it all out of your body. I think it's just easier or more natural or whatever.
I'm accepting birthday gifts. Buy my album. Before I kick the can, please.
Dude, you're gonna have to die before people buy your album. That's how it always is, right? The record sales
That's
for
how it
Michael
goes.
Jackson went up after he died.
Yeah.
Everybody's out buying Ozzy albums and freaking downloading, getting subscriptions just to listen to Ozzy music after he died.
Oh, I know. That's why I always throw that little comment in there to remind them that that's how it goes.
I mean, I don't know about your state, but my state has assisted suicide law. You can get
Oh,
assistance to.
wow.
So if you ever need some help, I can help you out.
Damn. You're serious. They really do.
No, I'm serious. Like you can kill yourself in my state legally.
Damn, we don't have that. I know Canada does. I don't know if that's a great law.
Like Mike goes, "You have to be famous first, though."
I got a tiny bit of fame.
Oh, I know. Oh, just funny though. Like it's like.
Then again, there's probably people that I consider to be famous that person has no idea who they are because they're not in my niche.
But like maybe that concept of like you don't get popular until you die only happens with the tops of the tops, like the Ozzies and the Michael Jacksons and the Bruce Willises. And I mean, I know Bruce Willis is technically still alive, but you know, everybody's gonna start watching all of his movies when he finally goes.
Well, I was actually just on the phone last night with the RZA from the Wu-Tang Clan's brother, Night Prince, and we're doing a song. So the person that's making that comment can say what they want, but at my niche, I'm talking to somebody who's at the top.
I know, just leave it to Mike to fill in the void.
And there's really only one more step to get to the top, and that's the RZA himself, which I'm not personally talking to yet, but that's, of course, the next step, I hope.
Well, I hope you do it mostly because you enjoy it, man, and then you have your peoples that enjoy
Oh,
it too.
absolutely, absolutely. At this age, still doing it? Come on, man. I'm way past prime, and I'm
Dude,
still doing it.
yeah, you have to have the right mental state because like my music is super niche and like nobody understands that crap.
Like for you, I'm sure you got higher up artists in your niche that you are inspired by, which I have no idea who the hell they would be, but that's your thing.
It's just mostly really popular folk artists that in their like channel, like in their like an example would be one of the guys I like the most. He's got like 3 million subscribers, man, and yet if I was to mention his name, nobody would know who he is.
Yeah, of
So
course.
it's crazy.
That's what I'm saying. Like somebody like that guy in the chat. Oh, he's not famous. Okay, well, see, he wouldn't know who that was.
But dude, he's like this guy is like not retired, but he's still in his like late 30s, and he's doesn't have a job, and he's spending most of his time now going around all of the Nordic oceans and helping cleaning up the oceans because he has enough money from his YouTube channel, because from the music he created, that he can just go do you know, whatever philanthropic ventures or whatever he wants to do and not have to worry about money. And yet, if you mention this person to anybody outside the genre, they're like, I have no idea who you're talking about. And he doesn't care because he's got 3 million subscribers and he gets like crazy hour.
Yeah, that's damn good. If you got 3 million subscribers, that's a full-time job.
And all he does, dude, he doesn't talk. He just keeps making music and posts his music videos.
Really?
With his music, that's all he does.
On YouTube, that works for him.
Yeah, because people love his music. It's like Viking folk music. It's got like a trancey type vibe to it. So it's for all the new guys or all the people that like techno and EDM and stuff like that. He attracts those people, and then he also attracts the old folk, medieval type whatever. So he's managed to appeal to both genres and multiple generations. It's pretty impressive. I don't like. He admitted in an interview that he didn't know it was going to come off this,
You
popular.
said folk music?
Folk music, FOLK.
I don't even know any of it, bro. But the only one name I could think of is a hip hop artist that went by Everlast.
Oh yes.
You know him. He's considered.
Yep. Well, I mean, I'm just saying, like, an example of like, so even Dr. Dre did this, man. He put some medieval melodies in his music, and most people didn't even know that they were medieval melodies, but they were public domain. So everybody thought, well, he's just super creative or whatever, but they're actually old school melodies from like the 13th and 14th century.
Oh,
I'm just saying, like, if you can find a way to make it sound like newer and they uh I don't know, whatever the new kids are into or whatever your generation is into in that time or whatever the world is into at that time, and you manage to like mix old music with new music and be really creative. Most people will never know that those melodies came from hundreds, if not 1,000 years ago.
yeah, I would think they're going to not know. Yeah, I got to take all my AI videos. I'm gonna make them to a DVD. It's gonna be all 17 videos on one DVD. Trying to put that together.
Dude, lip syncing is getting so much better, man. The new two models came out this last
Yeah.
week that are just mind-blowingly impressive.
Yeah, but unfortunately, I'm completely finished. So I think I did a damn good job. Of course, it's not perfect, but I did my best.
Well, the key is to get it to the point where it does not look like that you cannot tell anything was synthetically generated, and we're almost there.
Yeah, I'm pretty much almost there. I use a lot of mask where I put mask over the mouth in some scenes, and then a lot of what do you call it where you're watching the video but it's a 2A or something. I can't remember where it's offshoot video where it's not actually a speaking but something's happening, a scene. Anyhow, I'm pretty much done right now. I don't need to make any more. Well, I might need
Yeah.
to make one more because one song just came up out of nowhere. The one with
Yeah,
night.
dude, but you're gonna do what every artist does is that you're 2 years from now you're gonna look at what the current technology is and you're gonna look back at your old videos and you're gonna put them side by side and you're gonna go like, holy cow, what was I doing?
You know what? You're right. But I could always go back into my old catalog and get all of them songs and make videos for them.
Yep, that's what I'm saying. You're gonna want to do that because the fidelity is gonna be ridiculous.
Yeah, yeah, I see that.
And it kind of sucks too, man, because the minute you put an AI imagery to your music, people are like, I hate AI. I don't like AI music, and they don't. It's not binary. Like you literally can make the song yourself through your traditional means, whatever way you make them, and then throw AI imagery, and people are like, well, it's AI. It's like, no, dude, it's better than going to stock photo and getting a bunch of like forest drone shots of, plain, you know what I'm saying? Like just bland photography that may be beautiful and great scenery, but like you can tell your story. And so it's not like, but people just don't get it. They don't get that people are actually making their music and then putting in AI imagery to it to just have something to play on the screen. It's not like they don't usually take it too serious. But it's not black and white like that. It's very I don't know, it's very mixed. Now
Well,
what a lot of
where I
people
stand, I'm good. I like the video. I'm good with the video aspect. As far as the musical creation,
I mean, would you ever use AI vocals like generate like you make the
no,
song, you do
never.
and you
No, as a musician, never. I will for when I make music, I'm the real vocalist every time.
No. I mean, not like sometimes you have hip hop female singers in the back or whatever. Not you, not replacing your rap, but maybe
Nope.
like
I wouldn't use a fake singer AI woman. I wouldn't use a fake AI feature. I wouldn't use a fake AI made beat. Everything has to be authentically human created on the music aspect. Once I go into video, I don't give a damn. It could be a whole AI cartoon for all I'm concerned, which is actually what I'm interested in right now. Is I want the next AI video. I want it to be a cartoony like anime.
go to Civet AI, man. I have all the models on Civet AI for doing that.
Well, shit, you're more than welcome to collaborate with me if you ever want to on the video end. I'll be more than happy to send whatever followers I got towards your end.
Dude, I would never take on anything else other than what I have right now, man. I am so like in debt, project debt.
Yep, I'm finally getting debt free after all the years, last 2 years I worked on this album and the videos and everything. I'm finally done. Well, minus one song, because I was actually done with the whole album, and then the Ninth Prince, which is the RZA from the Wu-Tang Clan, his brother, got in touch with me, and he was like, "Damn, I hear what you're doing. I want to get on it." I was like, "Man, I just finished, so now I got to add him to it because he's too big. I mean, I have to add him to it. I don't care, even if like I already actually literally already put my album out as a first edition. So what I'm gonna do is I'm gonna come out with a second edition, and I'm gonna add that song on that second edition. If people don't like it too damn bad. But I'm doing all right. I'm doing pretty good on Facebook because my shadow ban finally ended. So I'm getting a little bit of activity finally. Not what I want to get, but I guess I'm not spending any money on it. So I could start running ads.
I run meta ads, man. They're kind of complicated, but you could target specific areas with them, and it's actually very effective.
That's what I would do. Meta ads on Facebook and Instagram. I'm more Facebook and Instagram based, mainly Facebook than YouTube. I mean, I have a YouTube, but I don't really put nothing into it. But I think I better start taking some of these clips and posting at the shorts there and seeing. I don't know. Do hashtags? I wonder if hashtags even work on YouTube Shorts.
They do, but they're not heavily weighted. It's not as important as the description.
Make sure you run separate ads on
the what I'm looking for. Like,
make sure you run separate ads for Instagram and Facebook.
Hashtag in the description. Maybe you wonder if that counts. I don't know. I haven't posted on YouTube for a minute, man.
I think AI music is gonna be poor man's entertainment, and human music is gonna become something like premium.
Well, just live performances. People are gonna cherish those more.
Oh, you should see what the streaming platforms are doing now. They changed their terms of service, and it's pretty disgusting what they're doing. Basically, essentially, what they want to do now is they're making you when you upload your music to the digital provider like DistroKid, and they set it to Apple and Spotify and everywhere else. Now, in the agreement, you agree that they are allowed to send your music into an AI model, to where now AI can scan your music from that you uploaded to a streaming platform. You're agreeing to let it do that so it can model you to create its own music. Now that's messed up.
Yeah, it will pretty much copy your style.
Yeah, good luck on that. But for more basic people, either way, I wouldn't agree to that crap anyway. I ain't uploaded no music to there since the old terms of service, and nor have I agreed to any of that.
It won't matter. Some Chinese model will freaking train on your data anyway. It doesn't
And
matter.
so weak. Well, good luck, because I don't have anything. I'm putting all my stuff on CD. Yeah, so go train it off of my cassette tape and CD. Good luck. I guess
you can create your own radio station on your websites. That's gonna be much easier than CD.
Yeah, but it would be streamed at that point, and then you can just copy it once it streams.
Yeah, I don't like that. What I would do is I'm going to put digital for people that don't want a CD or a cassette. I'll put digital download on my website. You download it and pay for that. But I'm done with streaming services. I don't like what I see.
You can put a barcode on the backside of your labels.
What, for to download digital, like a QR?
For downloading.
It needs to be a QR code. I'm from the '90s, man. I just wanted to buy the CD and the cassette, and I'm all about the movement and bringing that back, the renaissance of that, and I believe that there is a push going on for vinyl and even CDs still, especially in my niche. Maybe not new people as much, as I already know they're brainwashed. They won't do it.
Most people, they listen to the songs in their cars, but most cars, they don't come with the CD thing.
Yeah. Well, keyword most. I did the search the other day, and there's cars that still come with CD players. There's a couple Lexuses and some Subarus. Now, that's the top car I want. Makes me want to buy one of them, although I won't buy a new car.
Dude, my Chevy truck is a 2024, and it has a CD player in it, and I didn't ask for it. It's just a little slot that it doesn't take up much room at all. It's just probably really cheap and easy for them to put it in there.
Yeah, what the hell? They need to. Who told them that they couldn't do it? See, that's the problem, man. That whole you'll own nothing movement that's going on. We got to break away from that. There's nothing like collecting physical artwork and having something tangible and having a beautiful printout and just something to just put your hands on.
Well, as time goes on and more technology is introduced, man, there are going to be more niche stuff. Period. Like that whole vinyl niche thing. Like there's I don't know, it's mom and pops, but little hole in the wall places in like Seattle, for example, that's super popular. You got to wait in line to get in there.
I'm telling you, vinyl is selling still.
But everything turns niche, though. You know, just it's like there's going to be so much variety of stuff to choose from when it comes to physical stuff. Like the retro gaming stuff is big now. Like it's all coming back. Like people buying these little tiny Nintendo boxes that
I
looks like
love
a
it.
bigger Nintendo, and people are playing those games over playing the high end, you know, super intense high fidelity games. It's a thing. You know, pinball machines. People love all
The
sorts of
real
stuff.
arcade.
Yeah, arcade machines are going wild now.
You already know. I'm already sitting here with 1, 2, 3, 4. I got 5 right behind me right now.
I mean, I've been requested to commission to make a couple arcade machines, medieval styled arcade machines, and I don't have time right now. But people like want that stuff, man. I got one guy's like, I want it all gothic skull and bones, like you know, skulls everywhere and carved skulls, and I'm like, dude, I can't do it right now. I'm sorry.
You could. You got to make it easier. Get yourself a already pre-built cabinet, and you just add into it instead of doing all the fabrication yourself.
Oh, dude, I don't do pre-built anything. The conviction that you have with your music is how I feel about what I do when I build stuff.
Oh, okay, okay.
So you understand.
Yes, I do. You won't budge, and you won't take
Nope.
shorts and put.
Nope. I believe in the day and the age of Walmart and IKEA furniture, man. I build stuff with bold iron and wood from the ground up, and I don't buy any prefab anything. I make every single piece that goes into my art.
Enough said. Then
And
Regards
it's
to music, you know, top three publishing companies, they suing these AI companies about these copywriting thing.
yeah, I heard about that, and but also there was record companies, I believe, that were also doing that, but that maybe not the publisher, but the record company was, and they're on some shady stuff because what they're trying to do is that these record companies are starting to realize that their time's coming to an end, and they're starting to jump bandwagon onto AI and trying to figure out how they can get their piece of the pie now.
Oh, so yeah, Suno, one of the biggest AI companies or AI production platforms, just made huge deals with all of the music um, producers, production companies.
You
It
say
was it was just in the news like I think a week ago, or they just struck a deal.
they
'Cause
went
they
from
know.
suing them to joining them.
Yep, yep. Well, dude, they resisted the CD ecosystem resisted hard against MP3s, which most of the time you got an MP3, it was illegal means. And then Apple adopted as the ability to you to download the music you purchased as an MP3, so then it's now legitimized. Now you can pretty much not have anything, even you just stream everything, right? And that is not what they wanted, because that it the same problem had happened to Blockbuster, man. They did not, but now they like, okay, well, if you can't beat them, let's join them, and that's the only option they have at this point.
Well, it's going to come down to the artists because there's nothing without the artists unless they're going to have all AI artists. And I don't think people will buy into that from what I see. But you know what? If artists break away like me and we keep on coming and we're like, screw you, you don't get none of our music. We're going to come out with our own website where you can download our album and buy them right there strictly from us. And that's going to be a problem.
Emad, you would be surprised, man. I've been trying to learn music for like, I don't know, 6 years now, and I'm only an infant. Understanding music theory, and I'm getting better. But there's this kid, he's like, I don't know, 19 years old, and all he does is make medieval music with AI, and all of his when he produces a song and puts it on YouTube, all of these people like come out of the woodwork going, beautiful, beautiful, I love this. And he's got like 270,000 subscribers, and he had like last year he had like 100 subscribers. So like people are just dumb, man. They don't hyper analyze the music. If it sounds good to them, of course you're gonna have the people like no music, no AI music, and they will hold their ground, and they're gonna be sitting in the pool all alone by themselves. Fine, whatever. But majority of the public's kind of dumb, man. They don't know, and they just like if it sounds good to them,
You're
they'll
right.
subscribe.
You're correct.
And I may be using the word dumb is too harsh. I'm just saying they're very gullible. They're not going to hyper analyze the source of the music. So
No,
here
they're
I
not.
am.
They go for all the garbage.
Yeah, like I'm butthurt that here he's managed to grow his channel by 20,000%, and I can't even get over 1,000 with my authentically made music. There's a part in me that's like wants to play the victim card, but I don't because I'm like I mostly do it for myself, right? But it's just crazy how no one cares that it's AI music. If you write a good prompt and it sounds good and you find your peoples, they will subscribe to you and they will follow you and they will watch your content. And every once in a while, you'll get the guy that comes in and goes, "This is AI slop." And you know he has 270,000 subscribers. He can take the guy every now and then that comes in and goes, "This is AI slop," because it's not going to change his wallet. It's not going to change his ad revenue.
Well, in fact, it's helping him. He's
Probably.
all those haters count as viewers still.
Yep.
But I don't know. That's a bit extreme for me personally. I agree with you. However, I would think that most musicians wouldn't accept that for an AI artist that's a fake artist to be like that and to outdo a real artist. Pretty disgusted, actually. But breaking it down to a lower level, even like in my genre in hip hop, there's a lot of garbage artists. I'll just give one for example. Let's say Island Boys or somebody like that are just totally. I don't even know if you know who that is, but just that's totally garbage. But they'll be bigger. They'll have more views, more subscribers, and everything, just because of the way things are now, and they're so horrible that they got so many people that think that they're garbage that'll engage the algorithm. And they're there. They're down in the comments. You're garbage. You're garbage. You're garbage. Oh, this is garbage. And they're just showing up everybody like sheeple just to, and little do they know they're just putting them over the top to get them out there.
Dude, there's AI songs that are making that are making #1 on Spotify for like a few days before it gets knocked off by another song, and people have no idea it's AI.
Somebody bought my album.
Yeah, Spotify will be filled with AI songs, and the real artists they actually pulling away from Spotify because they don't get paid that much from Spotify.
Yeah, like I love tech, but I have my limits too. Like I don't like if it's abused and it's going in a wrong direction where it's destroying culture, I don't, I'm not for that at all. Like it's actually
that's the thing.
Makes me
There's
sick to my
a
stomach.
fine line there. In my opinion, once the AI becomes the artist, that's a problem. Because now you're taking away from artists, you're getting rid of us and replacing us with a robot.
Well, dude, that's why I do local rendering. That's why I buy the graphics cards and I do everything local using open source models because I'm not giving my money to any of those companies so they can just make themselves richer and bigger. Like I'm not going to stop them through that stance, but there's millions of people like me who are deciding to not buy subscriptions and services and just render locally, and they're not censored. You're not censored. You can do whatever you want, and then you're not having to pay a subscription.
I mean, if you're at least writing the lyrics, that's a start. You got to do something. But just, you know, I know how hard it is to put them videos together, though. So I'll give you that.
Dude, that's the thing. You know, YouTube's actually getting really good at this. They made it. It was like 4 months ago. They said that they were going to start demonetizing low effort AI videos and music. And so people thought that, oh, they're anti-AI, they're going to get rid of all the AI slop. No, they're getting rid of the slop, and they're going to accept the people who put
How do you
effort.
determine that?
That's what I'm saying. Their algorithm is actually getting really smart at. So what the algorithm is doing is it's if you put the metadata in your actual videos that you upload, like how it was generated, like let's say if it came from Adobe Premiere, like you actually clipped it and you massaged it and did all the effects and everything by hand. If you put that metadata in the actual video, they'll detect that that was handmade, even though that some of the actual video footage is AI generated. So they have their means of doing it, and so if you don't put the metadata in the actual video, then you're pretty much just you're Russian roulette. You're deciding on their algorithm. Their algorithm is going to decide if you're low effort.
Can I upload a YouTube short from my PC? Or does that have to be done from a phone?
You can do it from your PC. The YouTube Studio is on your PC. Anywhere where you can have a browser. I mean, obviously on the phone is the app, but anywhere you have a browser, you log into YouTube and you get
I'm
into your
on my
channel.
PC now. Where is the YouTube Studio at? Damn, I haven't done it so long. Oh wait, I see it here on
Just
the left.
view your channel and then you'll see it. YouTube Studio.
Studio. Let me try. I'm gonna post it. I haven't posted it in it. I don't know if somebody from Discord was the guy that just showed up and bought my CD, but somebody just did out of nowhere. I don't know if I should say his name, or can I say his first name?
If he's from
Don't dox people. Say their Discord name.
yeah, like just what you said is enough. Actually.
Okay, I don't know who his Discord name is, nor if he even is. So never mind. I only know his real name. Whoever that was, if it was you, name that starts with an E. Thank you.
Dude, I had somebody reach out to me a few weeks ago from Discord, wanted a chandelier made, so I'm making them a chandelier. I'm not going to out them though.
Okay, I'm in the studio. Where's Shorts at? They switched
Well,
up around.
so when you go and create, you go to upload. It'll give you the option. Normally, it auto detects if it's a short based on the ratio. You know, like if you made it in dimensions of a short.
Okay. It just says upload videos, go live, create post. There's no shorts. I guess it's just upload video.
Yeah, it will determine if it's a short. Like, I think it does it automatically.
Yeah, because because it's an upright video and it's short.
Yeah, yeah. Just make sure your dimensions are right, like 9 by 16 or whatever it is.
And it depends on the length of the video.
Yeah, yeah. If you're over a minute, it'll take it from. It'll make it a video, but it'll make it a vertical video that's a video and not a short. So you have to be careful with time, and I think it actually warns you too before you finally publish it. It'll let you know before you publish it what it's doing.
Okay, I'm gonna do it now. Let's see if I can get any traffic. What in the description? Type at to mention another channel. Oh, cool. Dbloc, I could mention you. I could send him some subscribers.
Hey Matt, what is the name of your YouTube channel?
It's, let me see. It's just my name, Emad Saad.
Hey, E-Man, you remember that Mac guy that was like did music in Team's channel? What happened to that guy? He didn't come over, did he? I think his name was Mac something.
I don't remember. I only remember Mr. Smiles. Okay, I posted a reel. I wonder if anybody will see it. Hey, Dbloc, I wonder if you'll see it. I tagged you. It's an AI short jacket.
Mike said happy birthday, Emad.
Oh, thank you, Mike.
He was totally bashing you a few minutes ago, and now he's your friend again. I'm just kidding.
Oh, it's all right. I'm used to it, Mike. A lot of people bash me and then they go listen to me and find out who I am and then they apologize.
I know. I'm just messing. I'm being a troublemaker.
No, I'm serious. I literally had people bash me badly before on Facebook and then send me messages apologizing, saying I didn't know who you are. Because they would have looked at my catalog and see what I'm really doing.
Hey Matt, where do you get your beats? Do you make them yourself, or did you get them from Beats
I can't.
stores or something?
I make some of them, but at all my older age and everything going on now, I just don't have the push there to do them. So I actually have several other producers that make them also. I got 3 solid producers I use. Oh, did you come? Did you see what I did? You must be on my thing now on YouTube.
Yeah, I was checking out your YouTube channel right now.
Oh, okay, right on. I don't have anything new on there. Everything's old. The only thing new is just the short that I posted. Everything else is old.
Yeah, I was listening to that on the Master Assassins. I was listening to that right
That's old. It's old. I got a whole brand new 17 track album that's on CD only. But that's what I just posted. A short was from a clip from one of the songs on it. I'm gonna start doing that now. I guess I'll post a short to every song, but I'm not gonna put the whole album on there. I want people to get the CD, man.
Yo, where the bulls at?